So welcome everybody, and this is a bit of an impromptu session that Shanika and myself put together because a couple of people were asking me, and I thought, well, there's a whole bunch of information that I tend to share, and it's much easier if I kind of share it together, and then if people have one-to-one questions, then I'm happy to kind of sit with them one-to-one and talk about it. But what I'm about to share, and I hope you're ready to strap yourself in. So who's ready for a bit of a roller coaster ride? Because this is a lot of information and I'm going to go fast. And I saw that Shanika made the meeting 1 hour. There's no ways it'll be 1 hour. So I'm just warning you up front. It will be recorded. So if you have to duck, so be it. But to put into context, I did my first programming course when I was 6 years old. So for those of you who know anything about computers, I was on a Commodore 64 and I learned how to program with Logo, which is where you program a little turtle. I was 6 years old. And I spent my whole life fascinated by what is happening in the technology space and specifically with technology and property and how we can marry the two together. So again, a gift I was given, and I don't want to be arrogant, but I do think a gift I was given was I've always had the ability to see kind of future trends and to see long patterns. I'm very good at pattern recognition. And what I want to share with you today is a talk that I originally put together in, can you believe it, 2014. So the first time I did this talk was in 2014. And I spoke about the major trends. There's technology trends and there's society trends, and they're intersecting. And I'm going to talk a lot more about this to explain it to you. And over the years, it's adapted in terms of, the different technologies and everything else. But the thing that's absolutely fascinating is that it's kind of 10 or 11 years old to be exact. But a lot of the stuff I was talking about in 2014 or 2015 is now mainstream in like 2025. So call it a decade later. I'll give you a good example. Artificial intelligence. So in 2014, 2015, I was talking about artificial intelligence. No one even knew what it was. You actually had to explain to people that when they go on Siri, that's, artificial intelligence, etc. And 10 years later, everyone knows about artificial intelligence. There's, no one doesn't know what it is. So do me a favor, type in the chat box, who is ready to strap themselves in to get, remembering that I studied this. So I studied my honors degree in technology construction in 1998. I did my master's degree in London in 2000 and 2001. So I've been doing this for, 28 years? And I'm going to try and download 28 years worth of knowledge into 90 minutes. So when I say who wants to strap themselves in, can you see why it's a lot of information? I will share the recording. I'm just trying to see there. Okay, I can see everyone's. Okay, cool. I will share the recording with you, and I've even created a white paper that you can read afterwards in terms of it. But I do want to just warn you, it's lots of information. I get very excited, so you're probably going to pick and sense my energy because this is really me living my purpose. Can I start with something in terms of something I've only just created very recently? So I actually want to just share this with you. And I've never done this before. No one else has seen this actually in the world. But where's it gone now? Here it is. Okay. So why I get so excited, and let me share my screen with you. So for those of you that are part of the mastermind, and specifically those of you that are part of my one-to-one coaching, you'll know that I'm hopefully getting you all set up with what is your identity. Because if you want to get 10x results, this book that if you come to any webinar this year, you're gonna get frustrated. But this book is an incredible book. So 10x is easier than 2x. There's 10 principles. And what I'm doing with my one-to-one clients is implementing this every single month. And the very first thing that we need to do is identity. So how do we upgrade identity? Because one of my big takeaways last year was I've always had these 10x goals, very aspirational goals, but I was behaving like a 2x person. And so what I realized was that the only way to get 10x goals was you need to change your identity and behave like a 10x person. So what I'm taking everyone through in the one-to-one coaching space is how do you upgrade your identity? And then ideally, if your identity is aligned with your values, which is aligned, I can't do it, with your behavior. So your identity, your values, and your behavior together. If all three of them are aligned, that's when you'll get your results. So let me just share two things with you quickly, which I mean, it's not part of this presentation, but I do want to share it with you because I think it's really, really important. So if I share my screen here. So I've been doing a lot of work, a lot of personal work around what is my identity. Now, why is this relevant? Well, I'm about to share with you how I believe we can change the world. And to change the world, we've obviously got to make sure that we get it sorted. So firstly, I'd strongly recommend that you all do this. It is slightly different to what we're actually talking about. But the very first thing you need to do in 2026, to get 10x results is review your identity, align your vision and your values, and then get your identity declaration. So just to show you very quickly, my two primary values are purpose and freedom. So how am I going to behave? If it doesn't scale impact and increase freedom, it's a no. Only accept meetings that create leverage, create revenue, and create alignment. Design Wealth University and Wealth Migrate to operate without you daily. Build one platform, one message, and one ecosystem narrative. And more than 70% of your time needs to be spent in visionary, revenue, and relationship roles. So just to show you my identity statement, and you'll see why this is relevant now when I explain to you everything we've built over the last decade. So I'm a visionary wealth architect. I design and lead a global wealth ecosystem that moves capable people from earned income to investor freedom through education, diversification, and aligned partnerships. I operate from clarity, not chaos. I protect my time, energy, and focus as strategic assets. I spend at least 80% of my time in visionary, revenue, and relationship roles. I do not carry what can be designed. I do not tolerate misalignment. I do not confuse activity with progress. I lead with integrity, decide with data, and build systems that compound without my constant presence. I earn my worth, live my values, honor my family, and build legacy through freedom, impact, and intelligent capital. So before I go any further, what do you think of my identity statement? Does it make sense? My wish for all of you is that you get clear on your identity, your upgrade you need for your 10x, you get clear on your values so that they're aligned, and you get clear on your behavior. Just by the way, if you do all of that, the last thing I'll share, and then you'll see why I'm sharing this because it is relevant to tonight's presentation, is that if you get clear on all of that, right down the bottom here, is that you don't, so this is for me, Scott Picken, you don't need new values. You need the courage to live the ones you already have without compromise. When your values, identity, and behavior align, 10x stops being inevitable and it becomes inevitable. Now, why have I shared all of that? The reason being is that what I'm about to share with you is a massive 10x goal. It's all been about building a wealth ecosystem. It's been about solving one of the greatest challenges on the planet, which is the wealth inequality. It's about democratizing access, and ultimately it's about letting everybody invest like the top 1%. Now, those are not small, those are not 2x kind of aspirations. And so yeah, let's rock and roll in terms of where we go. If you do have questions, type them in the chat box. If I can answer them there and then, I will. Otherwise, I'll answer them at the end, just so that it doesn't kind of kick me out of flow, if that makes sense. Okay, let me get that up. Let me get the chat room up. Okay, so what we're going to do in terms of this presentation is I'm going to take you through the 16 macro trends and the 6 mega investment trends that are all intersecting to create a generational opportunity in the next decade. So I know that's a big statement, and I'm going to show you how and why that is basically happening, with or without us. If you've been to a wealth weekend, you will understand the whole concept of Society 5.0, which is a Japanese concept. And there's a whole bunch of components to this. And I don't have time to take you through this whole thing. If you do come to the Wealth Weekend, I'll explain it in more detail to you. But in simple terms, there's a new framework, a new paradigm that we're going into, which is called Wealth 5.0. So you've got Investor 5.0, you've got Entrepreneur 5.0, you've got Society 5.0. We've created Wealth 5.0, which I'll talk more to just now. And then I've even got Scott 5.0, which is, who do I need to be to make this a reality? But I wanted to start with a video. And this video is a video that, believe it or not, in 2015, I sat with a creator and I explained to them my vision. I showed them and told them what I want to build. And they went and created a video. And in October 2015, we had a huge event on the Data campus in Johannesburg, South Africa. We had a couple of hundred people there and some incredible speakers from all over the world. And we played this video for the first time. And I want to share this video with you. I've watched it hundreds of times, if not thousands of times. But I think the thing that I'm most proud of is that everything that I'm about to share with you has been built. So 10 years of visioning, and now it has all been built. So let's share with you what we envisioned in 2015 and where we actually are now. I just want to make sure I'm sharing my volume. Just 2 seconds. Nope, I wasn't. So good thing I checked. Okay, let's rock and roll. I'm so proud of this video, but I'm more proud of the team for making it a reality.
We'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community, a community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, The Wealth Movement. WealthCreate.com is a platform for those taking their first steps on the wealth journey. The new investors who earn whilst they learn using real or virtual currency. Imagine this. Now anyone can own part of a hospital, a share in their local shopping mall, co-invest in a new and exciting development, or even earn quarterly returns from residential and commercial tenants. They, you, can now stand alongside multi-millionaire investors and earn the same relative amounts. WealthMigrate.com is a platform for those investors who are already soaring, as well as those who seek to join them. You can now own and manage a global portfolio of commercial real estate and do it all online. You'll benefit from the capital growth of your investments and get paid quarterly dividends in first world currencies, whether they be from commercial tenants or the funding of developments. The global dashboard shows all available opportunities, potential investment pledges, upcoming deals, and most importantly, allows you to manage your global diversified portfolio in one place. Passports and visas also become easier to obtain, as well as tax-efficient structures that allow global flexibility. Create the freedom you desire for you and your family. WealthUniversity.org is a video-based e-learning platform for those who want their wealth knowledge to take off. Our research shows that the wealth mindset is the single most important aspect of creating and sustaining wealth. Test your wealth IQ and challenge friends and family to find out theirs. Acquire the thinking, secrets, habits, and proven success strategies used by the world's wealthiest investors, as well as that of our global community, who aren't just talking about it, but are actually creating it. Graduate and change your destiny and your future. WealthMovement.com is the global gathering of our fans and followers in conferences hosted in local cities around the world, inspiring minds to help each other create more sustainable global wealth. The goal? To build a wealthier world together, and together to help reduce the wealth gap between the haves and the have-nots. Gain the latest up-to-the-minute knowledge of technology forecasts, internet finance, exponential thinking, collaborative smart investing, co-creation, apps and platforms, global wealth forecasts, cryptocurrencies, and new and exciting investment opportunities. This is your chance to meet your global wealth partners, co-investors and friends, to be inspired by the world's wealthiest individuals and to learn to think how they do. We are pioneering a global wealth revolution. Join us. Let's change the world.
So that's the video we made. Firstly, before I go further, what do you think in terms of kind of where we're at? I'd love to know. Put in the chat room what you think. So we created that. We presented that video. Nothing had been created in October 20. Oh, we had a platform, but it was nothing in 2015, October 2015, and 10 years later, everything's built. It's all built in terms of that process, which I'm very grateful to our team, to our community, to our shareholders that we've turned a vision into reality. Now, why is this important to me? And you know that anything I do, I always start with why. You know, my father and I, on my very first construction site, you all know the story of my dad when he passed away at 59, dying broke, and me looking at the research, and 99% of people were dead broke or reliant on the government and or financially trapped at 65. I love technology. That's logo that I mentioned. I love monopoly. And I also came from a country where we've got massive haves and have-nots. And it was like, how do we actually solve this grand challenge? And so here's another video. And I'm sharing with you some of our older videos because I want to show you the journey. And then I'm going to share with you the trends. And then you're going to see how it's all intersecting. Funny when I see that video because it's 133 countries. We're now at 178, and it was $600 million, and we're now at 1.3 billion. So just in terms of this saying, and there's going to be a bunch of things I'm going to teach you tonight, but I love this one. The right information at the right time is 9/10 of any battle. So again, I've been trying to talk about this for 10 years, not just me, obviously plenty of other people, in terms of where technology is going, these trends. But it's super exciting now that what we've been talking about for the last 10 years is truly becoming a reality and is actually coming into fruition. Now, let's look at COVID. So everyone, has bad memories of COVID. But actually what COVID did is it pushed everyone into the digital age, whether they like it or not, because you had the shutdown and everything had to go kind of online. And what always happens to people in terms of sentiment is that people tend to focus on this part. So they see this like massive drop and they panic and everything in between. But actually what's important is you got to look at the long-term trend. You don't just look at this dip, you look at the long-term trend. So I'll give you an example of this. I made this slide in 2015. I'm going to show you some old slides today on purpose, because I'm going to show you stuff I built 10 years ago to show you, and 10 years ago, I was trying to show people where the world's going. And now we're there. And now I'm trying to show you where the next, 10 years are going to go. So if you take the internet as an example, you see at the bottom here, we got time, and on the left, we got consume. So what that means is in the beginning, we had publishing. So that was just people putting out websites like Yahoo, and people would go and read. Then you had participation, and that's where the likes of, Facebook came along, and then you got social media. And then you got e-commerce, okay? So obviously you had social media, you had Amazon, people started buying stuff online. And the final step in this process is where you've got social media and you've got e-commerce, and they come together and they create social commerce, okay? And that's where investing online comes. And that's where what becomes important is what's the increased share of your wallet. So I'm going to talk later about wallets, and you'll see why Lemonway is so important, because it effectively creates stickier money. Like if I'm on Amazon, I go buy an umbrella. Great, I bought one umbrella. But if I'm on an investment platform, I invest, I reinvest, I get my dividends, I reinvest. It's much stickier basically, and it creates annuity income. Remember, a lot of the times today, I'm not talking to you now as an investor wanting to invest in an American deal on our platform. I'm talking to you about big picture trends, and I'm going to talk later about an opportunity if one wanted to participate and actually become a shareholder in the company. So I'm talking more with a big picture shareholder investor mindset. So let's take my friends. So we get to COVID, and I've been online. I've literally been online using Skype since like 2007, even before that, to be honest. And I've been using GoToWebinars since probably 2008. And yet the majority of my friends, when COVID came along, couldn't even get online. They didn't know what Teams was. They had no idea what Zoom was. This was just a picture of us getting together as mates, and they had literally no idea. They're all corporate people, no idea. Stock exchanges, no idea how to do stuff online. Everyone thought that they had to get in a room. And what was so interesting is when you take the adoption curve, you've always got the early innovators. They're the people that go and queue outside an iPhone store or a Mac store when a new iPhone's coming out. They sleep overnight. Then you got the early adopters. Then you got the early majority. Then you got the late majority. And then you got the laggards. Now, the right time to get into any company or specifically into an industry is generally around the early adopters. The innovators could take too long to make money. Once you get in the early adopters, once you go to the early majority, at this tipping point, this is where the majority of the money is made. So if you take like an Uber, in the beginning, kind of no one knew what Uber was. Then Uber started to get real traction. Now most people kind of know Uber, but Uber's made it, the big money's been made in Uber because, even my mother's on Uber now, the late majority, and I'm sure there's a few laggards that still haven't figured out how to use Uber. So the challenge with humans is that people move 4 times more away from pain than they do towards pleasure. So there's people like me that run out and go buy the new iPhone or try a new technology like blockchain or cryptocurrency. But the majority of people don't move towards pleasure. They move away from pain. And so what COVID did was it caused people, because of pain, to adopt. They had to get online. They had to learn how to buy stuff online. They had to do online shopping. They had to do online banking. By the way, my mother refuses to do online banking because she's going to be robbed. Well, when COVID came, she had to do online banking. They had to have meetings online. People move away from pain more than they move towards pleasure. And what COVID did was dramatically kick the world into the digital era. And again, if you take the likes of Uber, in the beginning, everyone kind of didn't even know what Uber was, and it was dangerous and this and that. And the taxis owners associations fought against them. And what you tend to find is that there's 2 types of people in the world. You've got people that make excuses, and there are people that get resourceful. Okay, and this becomes really, really important because a lot of what I'm going to be talking about tonight is about being resourceful. It's not about making excuses. It's about being resourceful, seeing opportunities, and embracing them. So let's go back to Wealth 5.0. I developed this framework and this model, again, about 10 years ago with Roger Hamilton. So it starts with impact. The most important thing is your impact, your purpose, and your sustainability. So Marina, I saw you online. This was a conversation you and I were having one-to-one today, all around the value and the impact. It's all about impact investing, and it's solving the SDGs, which are the Sustainable Development Goals, which are the UN goals. So what is the positive impact that you're having on the planet? Number 2 is creativity. So this is about creating value for people. Okay, it's all about value. I always say to my son, you can have anything you want in life if you help enough other people get what they want. If he wants to buy a new pair of rugby boots, fine, but create enough value for someone else. The third one is high touch. It's collaborative, smart investing. Now, again, I will talk a bit about this tonight, but I could do an entire webinar just on this. But ultimately, it's collaborative investing has been around since the kings and queens of the monarchs of centuries ago. And all that smart is doing, in the same way I've got a smart, watch, I've got a smartphone, I've got a smart iPad, a smart fridge, all that sort of stuff, smart TV. All that collaborative smart investing has done is take the principles of collaborative investing and with technology make it available to you and me when it was previously only available to the kings and queens. High tech, that's using all the exponential technologies, artificial intelligence, big data, virtual reality, crypto, blockchain, et cetera, et cetera, et cetera. And then finally, digital. So this is where you solve people's problems and you future-proof. So again, you look at where the world's going, what are the problems people have, and you create solutions for the future. Now, this is a diagram that we created a long time ago. And you can see here, and I know it looks a bit complicated, but does anyone know what the word meta means? just type in the chat room if you know what the word meta means. I know that Facebook's rebranded itself to Meta, but what does meta actually mean? I'm going to ask you lots of questions. So Kerry says, Kerry, lovely to see you online, dude. So Kerry says behind, transcend, begin again, Ingrid alongside. So my understanding of meta is it's actually above. And so what that means is that if you look at our overall ecosystem, it's a meta marketplace. It's a marketplace of marketplaces. So let me explain myself. You've got local marketplaces and you've got global marketplaces. You've got real estate, you've got diversification, you've got genres, and you've got community. So we started out by building a platform. And the very first, marketplace that you're aware of, you've all heard the name, is Wealth Migrate. So we built Wealth Migrate. The first version of Wealth Migrate went live in October 2013. We then built the Wealth Movement. You've watched the video now. That's all about our events and what we're doing, both live events, the Wealth Weekends, but also, when we do webinars, etc. Then we built the Wealth University. That was our learning arm. We basically had an investment arm, but we realized we needed a learning arm because people need to learn as much as they want to invest. Then we built Private Wealth Global. So that's where we started to partner with the family office, and we realized that actually it's not only about property, it's about alternative assets, it's private equity, it's structured notes, it's partnering with Calio in terms of the whole portfolio construction, et cetera, et cetera. The next step is something we've been working on for the last year or so, and that's been trying to get the genres up and running. So it's fascinating. I literally had a call yesterday. School, which you should all know School because you're on School, is spending $5 million a month on marketing. And what they've realized is the more niche focused you get, the more hyper focused niche that you get, the more results you get. So like their best performing ad right now is a Facebook ad that says, do you renovate kitchens and do you want to teach other people how to do it? That's their best performing ad. I mean, how hyper focused is that? So back to the genres, as an example, Derek's online, like farmers. Farmers have specific needs. They have specific wants, but they also got a specific language. And Derek is a farmer. He understands their needs. He understands their challenges. So you get specific to that genre and their needs. Women in wealth, women have different needs from men, basically. Sharia wealth, millennials in wealth, et cetera, et cetera. So, and the beauty is you can build all of this just leveraging the exact same infrastructure you've already got. And then finally, with time, we want to build out Wealth Create. So we've got all the technology. This is just a branding thing. We've already built the brand and everything else. We've done all the work. We just haven't launched it. But ultimately, this is where we want to pilot this in South Africa. And I want to do this with Jaco Maritz, where we help locals invest in local deals. So everything that we've done to date has been international and diversification and cross-border. But ultimately, we want to, the final phase will be where we help locals invest in local deals. And then once we've got the kind of franchise idea working, then we can literally roll it out to every other country. So that's again a slide that I put together about 10 years ago. And again, what we've been building, we haven't built, just to be clear, if I go backwards, we're kind of, what you see on the screen now is kind of where we're at. We're still trying to, our focus at the moment is the genres and getting that live. We haven't worried with Wealth Create and the other stuff. So just in terms of some of those genres, whether it's women in wealth, I know Marina's online, farmers in wealth, Derek's online, business owners in wealth. Abdul and I have had numerous conversations. Millennials in wealth. Alex wants to run with this himself. I always tend to joke with people, just like you've got the Amazon of umbrellas and whatever else Amazon has, why couldn't you have the Amazon of personal wealth? And I always joke with people, can you afford not to be part of this? And we built a thing many years ago called a wealth partner. And I'm going to explain a little bit later what a wealth partner is. But in simple terms, we've got our wealth movement, which you already heard. It's how do we change the world? How do we empower 1 billion people? Like ultimately, how do we make the planet a better and more sustainable planet for all? And for me, someone who's a shareholder in this ecosystem is ultimately a wealth movement partner. So they're a shareholder. They've got the benefit of being a shareholder with all the capital, upside, et cetera, but they're also emotionally involved in helping us create this future in terms of where we're going. And one of the things that excited me last year, and I don't remember exactly when it happened, but October, November, was Calio actually joined and became a shareholder. So for all the mastermind members, hopefully it gives you peace of mind that they've invested alongside, they're on the same terms, and they are now on this journey with us. So before that, we were handshake partners. We had the collaboration of the mastermind, but we weren't actually physical shareholder partners. We now are physical shareholder partners. They've physically invested their own capital, so not even sweat equity or anything, physical cash into the business, which was quite I'd been working on that for about 8 years. So it was quite a big thing for me to finally get that over the line, because I'm very much about working with people that we aligned. I'm not interested in doing anything if people aren't aligned. And Garth and I and our two businesses are very aligned. And they finally felt, right, we're ready, let's do this. Now, why is this important? Well, typically most of us only have the ability to invest in a company like a Facebook and Amazon once it's had its IPO. The vast majority of the profit's been taken off the table. The next is when it's scaling like an Uber and Airbnb. I know they've listed now, but there was real money made in the private equity space. But you had to know people. It's happening right now with SpaceX. SpaceX is a private company, and even though they do rounds of funding regularly, most people can't even get into it. Like you got to know the right people. And then you kind of got companies in the growth phase. So this is where they've been around for a while. They post revenue. They know how to make money. They've got clients. They've got a model that works, which is the growth stage. And then finally, you got the startup stage. And that's where, it's people that are trying to start a business. They often sort of get money from friends, fools, and families. And they don't, it might work, it might not work. They've got an idea, but they've got no proof of concept. So I've got a couple of questions, and I'm going to put up 2 polls today. So I'm going to just ask one poll straight up front, and I'm going to say, based on what I've said so far, would you like to become a shareholder? Okay, there's no commitment here. I'm just interested in what people's thoughts are. So I'm not going to be giving you, I'll leave the poll up while I talk. I'm not going to be giving you any financial advice. I am going to be sharing with you very much my passion and my purpose. And I'm also going to be sharing with you what I've learned over the last 28 years when it comes to all of these societal trends, these technology trends, and the investment trends. So the first thing that you need to know is about exponential organizations. Now, there's some great books that are here, and I've got them sitting here in my bookshelf. So the first book that I would strongly recommend is called Exponential Organizations. It's by Salam Ishmael. By the way, you don't have to go and learn all this stuff if you're not interested in it. Okay, and there's obviously been upgrades to this because this came out in 2015. There's now Exponential Organizations 2.0. But if you're interested and fascinated by where the world's going, you've really got one or two choices. You can either go do all the studying yourself, or you can jump on board and become a partner with me, because I'm doing this all the time. So you're just going to naturally learn from me through the process. But let's take exponential organizations. So what they did is they looked at companies around the world, and they said, what are the companies, funny enough, back to 10x, that are 10xing everyone else? And there were 11 components to what they were doing. The first thing that they were doing was they had an MTP, a massive transformative purpose. So a big, hairy, audacious goal about changing the world. As an example, in our case, how do we empower 1 billion people? Then on the right-hand side, you've got scale. Okay, so this is the creativity, growth, uncertainty. So this is where you have staff on demand. You don't have everyone underemployed. Like in our current team, about half of our team is not full-time. Community and crowd, you build your entire business based on community. Algorithms, you use technology to make the right decisions. Leverage assets. So this is where you don't have to go and buy everything. I mean, nowadays it's more common to understand this, but in the old days, you used to go and buy your own servers, and now you rent your servers. Everyone does that. But that's exactly the point. You don't buy anything. Like even in my relationship with Kalia, like I've leveraged all their assets in terms of what they're doing. And then engagement. What are we doing right now? This is engagement. It's learning, it's sharing, it's growing, it's the Zoom rooms, the meetings, the everything. It's engagement. What's up? Okay, so that's on the right-hand side. On the left-hand side, it's ideas. So this is interfaces. So what is an interface? It's very simple. This is an interface. Okay, a very advanced interface, and we paid $25 million to build this interface, but this is an interface. You're logging in. You have the ability to go and make investments around the world. You have the ability to go and look at your wallets and your dashboards and everything in between. So there you've got interfaces, dashboards. Experimentation means you're trying new stuff all the time. You're learning, you're growing, you've launched stuff, it doesn't work. I'll explain. Tonight's not only going to be about my successes, I'll talk to you about my failures as well. autonomy, you want to build teams with people autonomy, make quick decisions. You know, again, Jeff Bezos from Amazon said never have more than, I think it was 6 or 7 people on a team, as long as they could eat a pizza together, then get on and do it. And then finally, social, it's all about being social, like, and having a social presence and being human, basically. I always talk about us having a digital platform with a human heart. So I've got lots of questions to ask you. Does anyone know who Ronald Wayne is? Who is Ronald Wayne? There's a little trick here. And I know there's some of you here that have seen this presentation, so maybe you should remember. But who is Ronald Wayne? I'll give you a little hint. There's a little hint there in the corner. Yeah, Richard, you're right. It's the third shareholder. So he was the third shareholder in Apple. And in 1976, he sold his 10% in Apple for $2,300. That today is worth $70 billion. Probably quite a lot more now, actually, because of what's happened with the Apple share price. So the point of the reason I bring this up is the right information at the right time can be extremely valuable in terms of you making the right decisions. And hopefully tonight, I'm going to share a lot of information, but I'm hopefully going to help you make the right decisions. So let's look at just some trends around the world. And I've got some numbers here on my phone that I wanted to look at. So if you take Delta Airlines, okay, Delta was founded in 1924. It's the oldest operational airline in the world. It's in 320 destinations and 60 countries across 6 continents. Its workforce is over 100,000 people. It's got 800 aircraft, and it does 4,000 flights a day. Its market value is $28.8 billion. Now, you compare that to Uber. Uber was founded in 2009. It's in 85 countries and 10,000 cities, so nearly double in terms of cities. It's got 32,800 full-time employees, 5.4 million independent drivers, so not full-time. It's currently worth 86.15 billion, so nearly 3 times as much in terms of the process. Then let's look at Marriott. So Marriott is it was founded in 1927. It's got 121,000 employees. It's got 8,800 hotels. It's in 139 countries. It's got 1.59, so call it 1.6 million beds, and its value is 80 billion. It was also the very first company in the world, very first hotel group to go on the internet in 1995. Compare that to Airbnb, founded in 2008, approximately 6,811 people globally. So like not even 10% of Marriott. It's in over 100,000 cities and 220 countries. So like about 40% more countries than Marriott. It's got 7 million active listings. So 5 times more listings than Marriott, 5 times more rooms. And it's worth $83 billion in terms of the process. So when you look at any of these companies, Amazon, Uber, Bitcoin, EasyJet, Airbnb, Google, etc., there is one thing which all of these companies have done when they go into an industry. The first thing is that they cut the costs. The second thing is that they cut the middleman. And the third thing is that they dramatically increase the trust, the transparency, and the accessibility. Take any one of them. Take Uber. What did Uber do? It cut the costs. It cut out the middleman. You and me talk straight to the driver. And it dramatically increased the trust, the transparency, and the accessibility. Before it turned up, none of us had a private driver. Now, as long as we've got a smartphone, all of us have a private driver. Make sense? Just tell me quickly if that makes sense. And it's interesting, Kerry, because you've got me literally on the next slide. Because Kerry said, they also own nothing. Uber, no cars, etc. And that's exactly it. Uber owns no vehicles. Facebook owns no media content. Alibaba owns no inventory. Airbnb owns no real estate. So, if you look at this pattern, what is the thing that all of these companies do? So yes, they don't own the stuff, but what are they ostensibly? What are these companies? There's one word I'm looking for. Platform. Yep. Information, tech. So they're all right, but there's one word specifically, and it's data. They're data-driven companies. The marketplaces, they're all right, but the single word I'm looking for is data. And one of the things that I learned, which is so interesting when one's trying to look for opportunities, is that you basically need to look for a market where the market is really inefficient. So the experience for the customer is a horrible experience. It costs a lot of money. It's a very friction. It's a horrible, like it's just difficult to do. And ultimately, again, accessibility, like in terms of reach and all that, is not really there. So if you look at taxis as an example, I mean, it's a very inefficient market. I mean, if any of you have ever tried to go to New York or London and try to organize a taxi, and it's a horrible experience and it's costly, and generally they shit on you and basically treat you badly, and et cetera, et cetera. Uber comes along, changes the game, makes a huge amount of wealth. Well, for me, when you look at the property industry, it's literally one of the most inefficient and archaic industries in the world. It's a horrible user experience for the individual. It's really expensive and inefficient. I mean, I sold my house in London in March, and it only transferred at the end of August. I had to kick a bloody tenant out who had anxiety. I mean, the biggest load of shit I've ever heard in my life. Sorry to be direct, but it's a $13.6 trillion market that is just ripe, for disruption in terms of where the world's going. And so that's why when you look at these companies, it's really important to be looking in the area of growth and or scale. And the biggest kind of opportunity from an investor perspective is in the growth stage. Now, the next framework I want to give you is what's called old power, new power. So there's a great book that I would recommend. It came out in like 2018, 2019. Richard Branson said it was the best book of the year that he read. And in simple terms, you've got the old power values. So you can see down the bottom here, you've got old power values, you've got new power values. Then you've got the old power business model, and you've got the new power business model. Now, the one that I like to use is Encyclopedia Britannica. Most of us grew up probably with encyclopedias at home. I know I did. And, in the old days, there were a bunch of probably, old white guys sitting in some office somewhere that decided what was important. That was it. They were the people that decided, and then people sold encyclopedias all over the world. Then comes along Wikipedia, and it completely democratizes access. Everyone that's got access to the internet now has access to knowledge, not just middle and upper class people whose parents could afford encyclopedias. And so let's look at this and take this to the next level. So I took that framework and I expanded upon it. So you can see down here, old power, new power, old power model, old new power model. On the left-hand side, you can see return. So it goes from low return to high return. At the top here, it goes from global to purposeful, so left to right. On the right, it's got exponential, bottom to top. And then on the bottom, it's got short-term risk. And this is really important. Let me explain myself. So if you take Encyclopedia Britannica, it's bottom left, Wikipedia, top right. If you take the Marriott Hotel, which we've discussed, bottom left, Airbnb, top right. If you take Barnes & Noble, the bookstore in America, compared to Amazon, bottom left, top right. And if you take any kind of traditional property company and you compare it with a platform company like a Wealth Migrate or a marketplace like Wealth Migrate, this is basically how you sit. So you can see that in this corner, you've got far higher returns, global and purposeful, you're using exponential, but there is shorter term risk because in the beginning, you're changing a market. You're trying to get a market to adapt and change. However, long term, the risk actually declines in this top right because this is where the world's going. This is where all the trends are going. So this becomes really important to understand. Now, again, personal experience. In 2003, I lost 11,000 pounds. So I was buying rugby tickets to go to the World Cup in Australia. I lost 11,000 pounds. And I learned very quickly about social proofing because nowadays, if I buy any tickets, I'll buy it based on social proofing. So this guy, 7104 Leslie, has done 974 transactions with 100% positive feedback. I can guarantee that if I buy a ticket on eBay from this person, I've got more chance of getting the ticket than getting it if it was my brother. Okay, because there's no ways that someone's done 974 transactions with 100% positive feedback, and they're going to want to try and, they don't want to ruin their track record in simple terms. So take that forward. If you're on if you're on Amazon or Alibaba, we all know about this. You've got the social proofing, you've got the rankings, you've got the feedback, you've got all of the different things that are used to help us make better decisions when we buy, when we go on holiday, where we stay, where we go to restaurants, etc. This is Alibaba in China. Again, how long's the company been in existence? How many transactions have they done? Et cetera, et cetera. How do they positive to feedback or everything? And then finally, eBay. So I always say to people, why can't we build? So again, we've built the theory. We haven't built this into our platform yet. But imagine if you had different partners on our platform: silver, gold, platinum, years in business, projects to date, on and off platform, niche focus, industrial, retail, whatever. The amount of money that they're investing, I'd love to know that. Like, easily see how much are they putting in? What percentage of the total raise are they personally putting in? What are the risks they're assuming on this project? What is their responsiveness to communication? So some partners are really good at communicating, some are really bad. How good are they? What's their timing of dividends? What's the accuracy of returns? This one's great. How many of you you told you get an 8% return and then you end up getting a 6% return and you're kind of pissed off? You would much rather if someone said it's going to be a 6% return and they gave you a 7% return. So imagine if you had a partner that had like 115% track record. So what that means is that they always get better returns than what they projected. You'd rather invest with that person far more than someone that was sitting at 70%. And then finally, like a ranking. So you take that, we've got a whole badge system. Again, this stuff's all built. It just hasn't been built into our technology. But if you took due diligence, there's 10 different badges. And imagine if we did due diligence around the world using the concept of Wikipedia. So there's 20 million people that are accredited to be Wikipedia that can write to Wikipedia. You and me cannot write to Wikipedia. So again, like if I was trying to invest in Cape Town in storage as an example, I think that Abdul would make a far better investment committee member than someone sitting in America. So why would you not use local people with local knowledge to do local investments? And obviously it would be the same in America. So you get to see how this all works. And then finally, you got investor networks. So people love participating together. People love even challenging each other. So imagine if you had an investor network or an investor circle and you could invest together, you could get badges, you could compete with each other. This is all the gamification of where the world's going. And by the way, there's all of these pictures are ours. We've designed them. We've done the IP. We've done all the work. We just haven't, had the capacity to build it yet. But this is where the world is going in terms of your investment circles and competing and badges and everything else. And it's also how we'll get the younger generations to participate because it becomes fun. So if you're looking to build a community, the old world behaviors, and I'm now talking, and Alan, I saw you online, this is what the financial industry do. This is what the typical property company do. All they're interested in is complying. They want to comply with the law and they want you to consume. They just want you to buy the shit that they're selling. Okay, whereas new power behaviors, it's about sharing. It's about affiliating. It's about adapting. It's about funding. It's about becoming shareholders in the company and growing. It's about producing and being part of the solution. And it's about shaping. Like if you take Wikipedia, they even shape the way Wikipedia works. So there's a whole much higher level of participation, which then comes back to the massive transformative purpose. And this guy, Peter Diamandis, so again, a fantastic book I'd recommend. It's old. It came out in 2015 called Bold. But this is a great book talking about abundance, where the world's going, technology. Again, he's got later books, but this book was a really profound book in terms of understanding this. And he says here, the world's biggest opportunities are the world's biggest problems are the world's biggest opportunities. Well, what was interesting is that I went to Singularity University. So this is on the NASA campus in Silicon Valley. He started this university, Singularity University, with a couple of other people. And I went to the executive program. And I always ask people, how can you impact 1 billion people? Now, what was fascinating is that we didn't come up with 1 billion people because we went on this course. When I wrote this book back in 2013 with Clem Santa and James Painter, I did the research, and only 1 billion people on this planet have access to real estate, so residential real estate. And I literally said there and then, because it was at the same time, 2013, 2014 is when we launched Wealth Migrate. In those days, I could only help people buy houses, which was only for the upper class and high net worths. And when we launched Wealth Migrate, I was like, well, why can we not empower another 1 billion people? Like if there's 1 billion people, why can't we empower another 1 billion people? So I always find it fascinating because all the Americans running around, how can we empower 1 billion people after they'd been to this university? We already had it before we arrived in terms of the process. Now, just a couple of things around exponentials, a couple of things that are important here. So the first one is that it's people who can imagine and create an abundant future. Then you've got emergence and convergence, which I'm going to explain more to you, but basically it's technologies coming together. It's about digitizing everything. It's about this slow growth and then this exponential growth as they go through disruption. It's about asking better questions. Okay. And I'm going to kind of go into this a little bit more detail because I think this is really important. So this is a framework you really kind of want to understand. And it's to do with all technologies. I know, Marina, you were talking about an AI company you were looking at. So there's 6 stages in terms of exponential. They call it the 6 Ds. The first one is digitized. So that's where it takes an old world industry, let's just use taxis, and it digitizes it. So they brought out Uber, and now you could hire an Uber using your phone. Then it goes through a deceptive phase, and this is where it's growing slowly. One's becoming 2, 2 is becoming 4, 4 is becoming 8, but it's not impacting anyone. Like the taxi people don't care. No one really knows about it. This is while they're running around San Francisco, and no one really knows. But then it starts to become disruptive. Then the taxi drivers start arguing and start fighting. I don't know if you remember, many years you would watch stuff on the news and it'd be London, airport, Heathrow, it'd be Johannesburg, it'd be Cape Town, it'd be bloody Singapore, everywhere. And suddenly the taxi owner are fighting with Uber and they're trying to block Uber. And then it's all over the press and then everyone's like, who's Uber? And suddenly Uber takes off and it becomes really disruptive and it really impacts the taxi industry. And then finally it dematerializes, demonetizes, and democratizes, which basically means it makes it accessible to everyone. Like every single person that has a cell phone now has a private driver. Now, before Uber arrived, only the wealthiest of the wealthy people had private drivers. Now, if you have a smartphone, you have your own private driver in terms of that process. So when one looks at this, where do you think Wealth Migrate is right now? I'm just using Wealth Migrate because you know Wealth Migrate. But what I'm saying is the digitization of like investing, property, alternative assets. Where do you think we are? Do you think we're in digitized? Do you think we're in deceptive? Do you think we're in disruptive? Where do you think we are in this process? Give it your best guess. I'm just going to get a water while people are typing.
Democratize.
Okay, so I've got deceptive. Anyone else want to give it a go?
Democratize.
Democratize? Yep. We're going there. We haven't democratized. We haven't got access yet to 1 billion people, but we are trying our best. Digitized. Look, there's no right answer. I don't know the answer either. My gut feel, my intuition is that we're somewhere between digitized and deceptive. Like the industry is digitized now. You can buy and you can invest on our platform from $10. Yes, we've democratized whatever, but we're still very much in this, deceptive phase. Like we haven't impacted the financial industry. They barely even worry about us. Our assets under management in comparison with what they are, like it certainly hasn't gone mainstream yet. And so I think it's in this deceptive phase where it's growing rapidly around the world. If you take Bitcoin as an example, it's been growing rapidly for 10 years, but now it's very much getting into the disruptive phase and having a big impact on the financial industry. So this is a gift I wanted to teach you. And there's a guy called Ray Kurzweil. Now, Ray Kurzweil is kind of known as a futurist, but what's fascinating is that he actually has predicted over the last 30 years, he's predicted with an 81% accuracy the year that a technology was going to blossom. He not only got the technology right, but he also got the year right. Okay, with an 81% accuracy, which is kind of ridiculous. Okay, he's also the sort of the grandfather of AI, according to the guys at Google, and he's also the guy behind Singularity. So if you want to go and look this all up, and Singularity is the point where machines are basically more intelligent than humans. And what was interesting is I personally got taught by him. So when I went to Singularity University, I personally got taught by him. And my big learning lesson there was how do you find and spot these opportunities? Like how does he get to know when a technology is going to blossom and bloom? And more importantly, how does he get it like to the year? And he taught us a principle of convergence, which is where you've got 2 trends or even 3 trends that are trending, but then they converge. So a good example of that is there's 2 examples. The one, I'll just stop sharing here quickly. The one is that where I learned the lesson was he spoke about Siri. So the guys that built Siri, they said, right, what are some long-term trends? This is back in, I don't know the date exactly, but like 2012 or something. They said, firstly, AI is a long-term trend. Secondly, voice recognition is a long-term trend. And thirdly, taking AI and voice recognition to be able to answer questions, etc. So they created Siri, okay? And in 18 months, they built Siri and they sold it to Apple for like $300 million. Again, don't quote me exactly on the number. It was hundreds of millions of dollars. And everyone's like, oh, wow, they're so clever. But no, they just took long-term trends. They saw the intersection. They built a product for the intersection. They built it, they developed it, and they sold it to Apple. So that's exactly what Ray Kurzweil said. That's how you do this. So I took that away and I thought, wow, that's really interesting. And if you look at another trend, when the internet has been around, some argue, since before the end of the Second World War. Others argue kind of the 60s and 70s. It doesn't really matter. It wasn't mainstream. Like, it was only a bunch of tech nerds. No one knew how to use it. But it was in 1995 when Netscape came out. They call it the Netscape moment, which is where it made the internet and technology generally available to all of us. And so technology came out, Netscape came out, and suddenly it was a user interface in 1995 where everyone now had access to the internet. And when you look at those stats, I mean, it's ridiculous, the reach now that the internet has. I don't need to share the data. You all know, pretty much everyone has access to the internet. And even if you take the world's population, it's now 70% of the world's population has access to the internet. Now, take that long-term trend and these intersecting trends, and then take a company like Amazon. And if you take Amazon, it literally rode the trend. So I don't know if you do it or know, but Jeff Bezos was like a banker in New York, and he said to his wife, this is a big trend. We need to get to Silicon Valley. They sold everything. They flew to Silicon Valley in 1995. They started Amazon, and they rode the trend. When you look at it, and what, if you go and study Jeff Bezos, he said, what was the thing behind our growth? Firstly, they focus on their customers. Secondly, they focus on long-term. Thirdly, they focus on never either or, but both. I love this. So many people are binary. They're like, you can do this or you can do this. And Jeff Bezos says, no. Why make a choice? Why not have both? Okay, so not either or, but rather both. And then the last part, which I find really interesting, is that Jeff Bezos said, you must be willing to fail. You'll have to be willing to think long-term, and you have to be willing to be misunderstood for long periods of time. I know exactly how hard that is, because we've been on this journey for more than a decade. And a lot of what we were saying in the beginning. So I'm just going to mute everyone. I'm hearing a bit of background noise, and then if you want to talk later, you can talk. I'm just muting everyone, except for myself. Sandile, why are you not muted? Okay, Sandile, if you can just, it's your note taker. Okay, well, I'm just going to get rid of it. Okay. Okay, so let me show you now what does that mean in terms of value creation of that trend. Well, Jeff Bezos is the richest man in the world. He's even had a divorce, and his wife is like right up there. But if you'd put $10,000 pre-IPO into Amazon in 1998, I think it was, today it'd be worth $20 million. Okay, now let me give you some other examples. When Naspers went to China, and by the way, had multiple failures in China, but they eventually invested $32 million in a little company in those days called Tencent, and they bought 46.5%. Today, that is worth 120 billion. They reckon that's the best private equity investment ever made. If you invested $10,000 in 2001, it would be worth nearly $60 million today. And I went and did some research. In 2000, if you'd invested $10,000 in Amazon, 10,000 in Alibaba, 10,000 with Elon Musk, and 10,000 with Naspers, it'd be 274 million in Amazon, 108 in Alibaba, 40 million in Elon Musk, and 55 million with Naspers. Why am I showing you this? This is the value of spotting long-term trends, taking a 10 to 20-year view on it, and seeing that value creation. Do me a favor. I'm about to go into the first 8 trends. Are you with me so far? Have I lost you? Are you still listening? Because now I'm going to go into I wanted to show you how value was created by these long-term trends. And now I want to go into the trends. So who's ready for the trends? Just Richard. Everyone else can go home. No, I'm joking. Loretta, you can stay as well in terms of the process. Okay. Let's go through the trends. So I'm going to go through these quickly, and then I'll explain each one of them in more detail for you. Okay. Number 1 is blockchain, solving trust. Number 2 is artificial intelligence, connecting us to the world's intelligence. Number 3 is big data algorithms and quantum computing, helping people make smart investments. Number 4 is VR and AR, experience the reality. Number 5 is O2O, connecting the world's best with the world. I'm going to explain what this means. Number 6 is mobile phone adoption, connecting the global economy. Number 7 is 3D printing, reducing costs drastically. And number 8 is the digital layer, IoT, which is the Internet of Things, bringing it all together. Okay, so let me explain what these 8 are. Now, when it comes to blockchain, who knows what blockchain is? Do me a favor. If you know what it is, type yes. If you don't know what it is, type no. I'm fascinated because when I first heard about blockchain in 2015, I was like, that's the future of the world. And I'm surprised in 2026 that it hasn't dramatically changed everything. And I never realized that the regulators and the big business would hold it back so much. But this is the best video I've ever found on blockchain to simply explain blockchain, because most people kind of understand it to some level, but this is the best video I've found to explain it properly. Oh, sorry, just before I explain it, we were on the blockchain in 2016. We were the very first real estate platform in the world to be on blockchain in the 2016. So we've been doing this for 10 years already.
This is the seller. This is the buyer. This is the middleman. Cutting out the middleman can be a great thing, unless you're the middleman. And there are a lot of middlemen or intermediaries out there. Entire industries, such as payments or securities clearing, have evolved to rely on them. Why? Because they establish trust where there is none. They establish ownership, that the seller has the right to sell what's being sold. They attest to history, that there is a clean transaction history. And they certify ability, that the buyer has the money to buy it. All pretty critical details when you don't know the person on the other side of the transaction. Intermediaries know and trust one another. Their business is based on it, so they have more to lose than gain from breaching that trust. But what if there were a better, cheaper middleman, one that didn't add as much cost, complexity, and chance for error? There might be. It's called blockchain, and it has the potential to disrupt the entire ecology of intermediaries. It's a distributed ledger that relies on large networks of computers that redundantly encode transaction data by solving complex mathematical equations. The secure ledger provides an inviolable record. If the history of an instrument is incorruptible and available to all parties, there's no need for a third party to vouch. Blockchain is proof of ownership, history, and ability in non-centralized encrypted form. It's fast, transparent, and free of error. The question is not whether blockchains can cut out the middlemen in complex transactions, but rather which middlemen and when.
So hopefully that gives you a good understanding of blockchain. And I mean, when you consider, let me put my camera back on, you know, the 9 industries that will be disrupted most by blockchain. The first one is banking, so completely inefficient and millions of bloody middlemen. And then the real estate industry in terms of that opportunity. Now, if you just want some stats, and I know there's a lot of information, I'll share the slides with you if you want to go and actually read it. But blockchain's trust infrastructure, so blockchain is evolving beyond cryptocurrencies. It's becoming the trust layer of the internet, enabling secure, transparent, tamper-proof transactions without the need for intermediaries. In 2025, trust is no longer assumed, it's verified. Blockchain ensures provenance, authenticity, and accountability across industries. Real-world adoption is accelerating. Supply chains are being revolutionized by blockchain. Major brands use it to trace products from origin to shelf, fighting counterfeiting, boosting sustainability, and ensuring ethical sourcing. Healthcare, finance, voting systems, and real estate are integrating blockchain for secure record keeping and identity verification. Digital identity and ownership. Self-sovereign digital identity is rising. Blockchain gives individuals control over their data and credentials. Think healthcare records, credit scores, certification. Ownership is being redefined through tokenization. We'll talk a lot about this today. Real-world assets, real estate, art, even revenue are being fractionalized on the blockchain. That's exactly what we do. So we've tokenized real estate, we've tokenized private equity. That's exactly what we've done and fractionalized it. Institutions are going on chain. Governments and central banks are developing CBDCs, central bank digital currencies built on blockchain for faster, cheaper, and more transparent money movement. Financial services are embracing DeFi, decentralized finance, to cut costs, increase access, and automate trust with smart contracts. And then finally, by 2030, experts predict over 10% of the global GDP will be stored on blockchain. We're heading towards decentralized, trust-based digital economy where every transaction has built-in transparency and verification. Now, I don't expect you to remember and learn all this stuff. Like, I've been doing this for 28 years, but I do want to kind of give you a sense of where things are going and how, and the impact this, each one of these technologies is going to have. The next one is AI. So I find this one really interesting. Artificial intelligence will reach human levels by 2029. Follow that out to say 2045, we will have multiplied intelligence, the human biological machine of our civilization by a billionfold. Ray Kurzweil, the same guy I was telling you about. So back in 2015, when he said 2029, I was like, yeah, whatever, dude. Nowadays, it blows my mind. Like, I've literally, for those of you in the mastermind, you've seen me go through this. Like, I've literally been through my clone. Like, I've built an entire clone. I've got my own, it's got all of my writing voice, it's got my business clone, it's got my personal DNA, it's got everything. Like, I'm looking at doing, we're upgrading the mastermind, generating prompts, my values, my 90-day life advice. Like, and by the way, I'm going to all teach you this year how to build a wealth clone and everything in between. Like, the power of AI is just phenomenal in terms of, using this to your benefit. I mean, I basically, personal and business, like, basically can't live without AI now. I use it all the time. So what is the future of AI in terms of where we're going? Well, the economic impact, 15.7 trillion economic contribution by 2030. AI is still on track to contribute 15.7 trillion to the global economy by 2030, primarily through productivity gains, 6.6 trillion, and increased consumer demand, 9.1 trillion. The AI market is projected to grow 33% in 2025, building on 2024's base. In 2024, over 25% of US startup funding went into AI companies, up 12% from a few years earlier, and it's accelerating. Adoption in organizations, 63% of global organizations plan to adopt AI by 2027, and 74% are currently piloting or using AI tools internally. We use it for everything. Generative AI, ChatGPT, has boosted workplace productivity by 126%, especially coding, writing, and customer service. Workforce and productivity, by 2025, AI is expected to displace 85 million jobs, but create 97 million new ones for a net gain of 12 million. AI increased labor productivity by 1.5 percentage points globally over the next decade. Consumer and ethical concerns. 76% of consumers express concern about misinformation generated by AI, highlighting an urgent need for ethical standards or safeguards. Training a single large AI model can emit as much carbon as 5 gasoline-powered cars over the entire lifespan. And then AI in everyday use. Around 77% of digital devices now use AI in some form, yet most users don't realize how deeply integrated AI has become into daily tech. And then I just like to show this. A year ago, I wanted to do a thing for Jonty called Dad's Discoveries. And I did this thing and it couldn't spell. Like, I don't know if you can notice this, but it was so frustrating. It would like make a picture, but it couldn't spell. And I mean, I can't spell. So, I had to go and like take the picture and then put a picture above it. It was just very bad at spelling. You fast forward that 6 months, and then this was a picture I made for this presentation. And you fast forward that 6 months later, and then you're getting this type of picture that's got, not only looks really fancy, but it's got the logo and everything. And it's just evolving, every 6 months, or even before every 6 months, it's just getting better and better and better and better and better. Now, you go to the third one, which is big data. And, imagine like we've got the investor test, we've got the wealth game and everything in between. You marry that together with GIDS, our global investment due diligence system, and you bring it all together and it allows people to make smart investments. So think of it like a dating site. Like in dating, you've got a man and a woman, and they've got different needs, and they put it on dating site, and the dating site helps it come together. Well, imagine in this case, it's exactly the same thing. You've got the Enneagram in wealth, or the wealth EQ as they call it. You've got, which is the investor needs. And then you've got the GIDS, the global investment due diligence system, which, and it marries the two together, and it allows people to make the right investments for themselves going forward. So this is something I'm very excited about in terms of it. It's something Garth and I have been working on a lot to bring out hopefully this year. VR and AR. So VR is virtual reality. That's where you put goggles on your head. I've actually got a set downstairs if you want me to go and get them. And then AR is actually more of the future. So AR is where it's augmented reality. So that's where you take your phone and you're looking at real life stuff, but your phone is overlaying or with glasses. So like a Google Glass or whatever. And again, imagine being able to look at properties and investments and whatever, and you can literally go all around them and everything in between. So it makes the reality. And again, I always show people, 10 years ago, this was kind of VR and AR. I mean, it's just some funny pictures. This is my son when he was younger, and that was supposed to be a crocodile. It's an alligator and a tiger and a lion. I mean, they're very, very amateur. But compare it now to the likes of methodology. I think most of you already know methodology. But anyway, he's a good friend of mine, Mike. And if you take this here, just watch this little video of what they're doing with regards to augmented reality now. I think you get the point in terms of the process. Then you got O2O, which is kind of where technology is going. So this is online to offline. And again, when you look at SoftBank, which is the biggest venture capital company in the world, they saw this a while ago. They were investing in the likes of Uber and Nvidia and all of them in terms of the process. And it's all about taking something that's offline, taxis like Uber, and integrating it with technology. So you've got offline to online. And it's really kind of where the world's going. So the internet has gone through this process from Web 1.0 to Web 2.0 to Web 3.0. And Web 3.0 is where it's all integrated now, online, offline, everything in one place in terms of that process. Now, I'll give you an example of this. We've got that private equity opportunity, CarryFit, that we had on our platform. So offline, you've got the carrier bag, like the person carries around the little baby in the carrier bag. But online, they've got the app. So that's why they've married it together, and it basically creates offline. So you've got mothers that are buying the carrier bag for their children, I suppose dads as well. And then you've got the app, which has all the fitness programs, and it has the community, and has the participation and everything else. So the value changes dramatically, because now you don't just have an offline product, you've got an online product with a digital community, you've got annuity income and everything in between. Connectivity, I mean, I think this one's self-explanatory, particularly for those of us that live in the emerging world. Everyone has a cell phone. Literally nowadays, people spend their money on data and getting data before they buy beer or alcohol or whatever. And so what this means is that there's 4.2 billion new minds that are coming into the world's market that didn't have access to knowledge, didn't have access to buy stuff, etc. And they all are joining the middle class. And it's been happening, dramatically already. But over the next, particularly when Starlink comes in around the world, and certainly over the next 5 years, literally everyone's going to have access no matter where they are in the world in terms of connectivity. And just think about the impact that's going to have with regards to consuming and investment and education. And, because every single one of them has the same needs. They all want to, build a happy family and invest and ultimately, be able to send their children to school and university and everything in between. And then the final two is 3D printing. Now, I wanted to share this video with you because I've been talking about 3D printing for a while, but this is probably, of all the trends, the one that I didn't really, I can see the benefit of it, but I didn't see it materializing. And then 2 years ago, so it was October 2024, I was in Atlanta and I met this guy. This is me physically. I took this video and they were showing me how they 3D print houses. And I was like, wow, this is a game changer for affordable housing, because in America, the average affordable home now would cost in the region of like, say, $300,000 in a place like Atlanta. This guy can build these houses for $70,000 and he can build it in 2 weeks. So anyway, let's watch this video a little bit. So Jaco, I'm here with Jack, and this house here, it's a big shed to be fair, but it can be a low-income house. Tell us just a little bit about it. Like, I know you've just been telling me some amazing things, but I really want Jaco to hear this.
Yeah, so I was a previous builder in another lifetime before I was an attorney. And what we've realized is that stick building is just, there's just no money in it, and there's no way to do it because of the quality of the wood and everything else. So what we've done is we've taken some Howick machines, which are effectively
so just to look here, so like there it all is. It literally gets like printed here, basically.
Yeah, so basically what we do is we print all the components to the 32nd of an inch with everything dimpled and ready to be screwed together. So you can see it's not just printing steel studs, but everything is pre-designed to go together in a perfect way. So every wall is flush, every wall is square, everything is exactly as it should be. And we can put, for example, one of these up in less than a couple hours. It prints off the machine in less than 30 minutes. And a house, let's say 1,000 square foot house, we could put one whole frame together in a day, easy. We could probably do 2 houses in a day. And then we can wrap it and sort of finish it off in another 2 days. So every 3 days, we can put about 1,000 square feet out the door. If it's narrow enough, you can put it on a truck and drive it where you want and lower it with a crane. If it's too wide, we can just do it in panelized sections and then put it together. But this is how we're sort of addressing the affordable housing problem in the United States right now.
2 quick questions, which I think are relevant. One was you said that this is open source software.
Correct.
And we could buy a machine and let's just say put it in Cape Town, and you guys could print like basically do the design, and we basically print and build in South Africa.
So all you would do is send us a plan. We would do all of the engineering and stuff here. You tell us where everything goes, every service hole, every duct, vent, whatever you want.
I think you get the point. If you want me to send you a whole video, I can. But imagine what this will do for affordable housing around the world, when you can literally print on site. And like you said, you can construct 2 houses a day. That's obviously the structure. You would still have to put the finishes in. But I mean, you can basically build an entire house in somewhere between 2 days and 2 weeks. Just think about what that's going to do for real estate worldwide. And then digital layer. And this is the IoT. So the digital layer is becoming the real world. So this is where you've got interfaces all around, basically. So by 2025, digital twins, virtual replicas of physical objects, are expected to be widely used in industry, from real estate to healthcare to urban planning. The digital layer is no longer optional. It's how businesses monitor, and optimize operations in real time. IoT is exploding at scale. The number of connected IoT devices. So this is where like my watch is an IoT, because it's got all the sensors in it already. So when I run, when I sleep, etc., that's exactly what IoT is. Will surpass 30 billion by 2025, generating zettabytes of data. By the way, you should be investing in data centers. IoT is the new backbone for smart cities, homes, agriculture, logistics, and energy systems, enhancing both efficiency and sustainability. Interoperability is the new frontier. So that means where all the technologies are being used together. The biggest shift isn't just adding sensors, it's connecting them. Companies are moving from siloed systems to integrated platforms that share data across devices, departments, and even organizations. Edge computing is rising fast, processing data locally rather than distant cloud centers, reducing latency and increasing security. The impact on individuals and society. Consumers are interacting with the digital layer daily, wearing wearables, voice assistants, smart homes, and more. Healthcare is a major beneficiary. Remote monitoring, predictive diagnosis, personalized treatments are now IoT-enabled realities. And finally, the economic opportunity. Global IoT is projected to reach 1.5 trillion by 2030. Companies that master data integration and automation will dominate the industries. Right. Those are the 8 technology trends. Let me now pivot into the 8 societal trends. The first is social commerce and collaborative investing. That increases returns and reduces risk for investors. The rise of the middle class in emerging markets, and the 3 billion unbanked people joining the global economy through mobile adoption and internet connectivity. Globalization and local volatility, creating conditions where investors desire diversification across countries, currencies, assets, and partners. Blockchain and cryptocurrency, increasing trust and massively reducing friction costs. Social pressure to democratize. So this is the whole democratize access to wealth, empowering the 99%. Gamification and learning while doing, fundamentally changing the education system. Personalization and personal solutions for themselves and their families. People want the power to create freedom in their lives and have a meaningful connection with their investments. and then investors wanting to have a purposeful impact on co-creating the planet they want to see. So let's go into this a little bit more detail. There is an article on LinkedIn, and if you just want to put in there smart investing, I will share the link with you. So I've done an article on this, but in simple terms, I did my dissertation on this in 1998. And if you look at it, when it comes to cars, you originally had craft production. So that's where they built a car for a wealthy person, but it was once off, it was built for a wealthy person. Then came mass production. That was Henry Ford. And they built the Model T Ford, and you could have any color you want as long as it was black. And then finally, you had lean production, and that's where the Japanese came in, and they enhanced it, Kaizen, and the whole bank process. So I don't have time again to teach you all of this, but there's a period, like you can see the period of when it happened. You can see the type of production, craft, mass, lean, digital. You've then got commerce. Okay, then you've got compliance and regulation, and then I've even put the brands that this represents. And if you look here, we've gone through this whole component of everything I've already tried to share with you. But where we're going is collaborative smart investing. And we've built ourselves for the future. So for 10 years, we've been building ourselves for this future, where you've got the compliance, you've got the commerce, you've got the production. And that's why I say the brand is Wealth Migrate, that ultimately represents all of it. So if you're interested in smart investing, just type in smart investing, and I'll send you the article. You can read all about it. There's also another article on collaborative investing, which is again how the kings and queens invested. If you're interested in that, I can share both of them with you. There's no ways I can do justice to this in 90 minutes or 2 hours and share everything I've learned in 28 years. Okay, but that's the first major trend. The second major trend, the first trend. So you can see here, like this is where the big fund managers are starting to say DIY investing is fun but risky. This is because it's starting to challenge them. They don't like this. Or this year where the company was going out of business and they wanted to, try and crowdsource solving it. I've seen people, putting in bids to buy the Springboks, etc. But in simple terms, if you go to the Wealth 5.0, it all starts with this purpose and sustainability. How do you solve the biggest problem on the planet, which is the wealth gap? And that's what social commerce and collaborative investing and smart investing is all about. Number 2 is the rise of the middle class. So if you go from 2016 to 2025, and you take countries like South Africa, China, India, Malaysia, Africa, Indonesia, the number of people that are now online is over 1 billion people. So 1.3 billion people. It's a growth of 1.8 times. And we've always said that, while everyone's fighting for people in England and Australia and America and Europe, like we're going after the emerging markets because that's where the biggest opportunity is. You've got large and young populations, you've got population growth, you've got GDP growth, you've got urbanization, you've got online adoption that don't have great access. And that's where the real opportunity is. And if you think about Wealth Migrate, we've helped people invest in England and Australia and Europe and America, but our clients have primarily come, certainly in the beginning. I know there's more and more people now coming from the first world, but in the beginning, they all came from the emerging world, China, India, Dubai, South Africa, etc. The rise of the middle class in emerging markets, there's so much, research out there, digital platforms, private markets, and ESG. The future of investing is already here. Number 3 is globalization. So again, in the old days, when I started my company 21 years ago, we only really helped wealthy people buy houses or apartments in England or America or Australia. Only basically, high net worth people would have access. But now everyone wants access. I'm blown away by how many people in England and Europe are like, we need to diversify. We need to get our money out of our country. So globalization, people realizing. And one of the things that excites me is that technology is a bridge of safety. So we've built Wealth Migrate to help people in Africa invest in London. I'm just using that as an example. But I see a future in the not too distant future where people in the first world are going to be wanting to invest in the emerging world because there's going to be better returns. But the question is, how do you do it safely? Technology. So we've created a bridge of safety from the emerging world into the first world. But I see a future in the near future where that safety will be from people in the first world into the emerging world. And my first country that I want to get into is India, because I think there's significant opportunity in India. But when you look at the whole globalization, Ray Dalio said, I lived through the collapse, America's almost there. Ray Dalio is talking about how you need to diversify. And he's not saying, Anthony said it on Tuesday, Anthony and Garth said it on Tuesday night. They're not saying don't do America. They're just saying you shouldn't have all your eggs just in America. It's about diversification. Capital markets are not free. Billionaire investor Ray Dalio says Fed is boosting asset prices. Valuation metrics don't apply and the US dollar is at risk. Right, number 4, blockchain and cryptocurrencies. So again, I've already shared with you what's happening with blockchain, but it's if you look here, like anything, it's had these rises and falls when people have got excited. So 2017 is when the whole ICO thing happened and Bitcoin went through the price, through the roof, and then it had like a bit of a crash and whatever. But actually what you need to be looking at is the cumulative growth rate. So look at what's happening with regards to blockchain, cryptocurrencies, etc. Okay, and that's the orange trend that you should be focusing on. Just some examples. This one, crypto anonymous, switching digital assets for real estate is simple. Cross-border real estate investing powered by blockchain. The first stock exchange in real estate, admission to trading now open. Does digitization democratize real estate assets? DigiShares for the world, disrupting the commercial real estate industry. This was buying houses and getting daily rental payments. But the thing that I've always found quite interesting is that the majority of people that are building these things have never actually invested in property. So there was a company that I met in, I don't remember, somewhere in America, and they'd raised $15 million, and it was 2 young people. It was a boy and a girl. They were 26 years old, and I said, "Oh, how much property have you invested in?" I was like, "None." They'd never even bought a house. They'd only rented a house. We went out on a limb in 2017. We launched our own cryptocurrency. The whole idea was to have it backed by real estate. So imagine if you had like Bitcoin backed by real estate. We launched it in 2017. The laws have still not changed to allow secure. I'm not going to go into all the details, but to go. So that was a utility token, but you've got to have a security token. And so we basically had this project on hold. So this is a classic example of me being too far ahead of my time. And they talk about the explorers in America. If you're too early, the Red Indian shot you in the back. This was a good example. So we launched the Wealthy Coin, and the whole idea, and I still believe in this, like I want to have a cryptocurrency backed by real estate, but it's taken us a long time, and the regulators to this day have still not allowed it. Number 5, the social pressure. So these are the sustainable development goals. And if you look here, number 1 is no poverty. So we basically are solving the single biggest problem on the planet, which is how do we solve the wealth gap? If you look over here, number 4, quality education. So that's through Wealth University. Gender equality, we're trying to do that with even the likes of Women in Wealth. Industry, innovation, and infrastructure. So, I mean, data centers and the stuff that we're trying to do. Reduced inequalities, sustainable cities and communities. So you can see here that there's 5 or 6 of the sustainable development goals that we're actually targeting and trying to solve. And then number 6, gamification and learning while doing. So if you look here, what does gamification do? Well, it gives you instant feedback. It's a better learning environment. It's prompted behavioral change. It can be applied for most learning needs. It has an impact on the bottom line, and it has a better learning experience. Now, just to give you an example of this, again, a slide from 2015, I basically said, look, if you take adoption on the left and you take growth at the bottom, when it comes to online learning, there's been massive adoption. Over the last 10 years, there's been massive adoption in online learning. When it comes to online investing, there's been quite a lot of growth, but not a lot of adoption, if you take it. And so what I always said is that the currency of the new economy is trust. And so how do you solve trust? Well, you marry together education and investing. Hopefully now you see the big picture. That's why we built Wealth University and Wealth Migrate. Because if you marry together the learning and the investing, that's how you build trust. That's how you grow your adoption. And if you look at gamification, if you go onto school, we've actually got all the gamification already there. It's nowhere near the level I want. I've already expressed with you earlier what I want, but it's certainly a start in terms of the process. Personalization. I think this one's probably self-explanatory. 48% of consumers spend more when their experience is personalized. 90% of marketers believe personalization is the future, and 74% of consumers get frustrated when content has nothing to do with them. Now, let's look at what we do. If you're part of the mastermind and you do step 3, which is the investor profile, you go and do your Enneagram and wealth. There's 27 different types of investors. Once we know what type of investor you are, then we can actually help you. And every single person gets a report. They know exactly who they are as an investor, what are the right type of investments for them, what are the mistakes they've made, et cetera, et cetera. Or if you go to the next stage, and by the way, there's so many testimonials of people going, it's incredible. It's like to really get to know yourself. Or if you go to step 4, which is where Anthony and the team sit down, they understand who you are, your tax, your structuring, your property portfolio, your pensions, and then they come and give you your portfolio and they optimize it. So they start with your Enneagram, which is your wealth EQ. It's like, who are you as an individual? Then they understand what is your current portfolio, your tax, your structuring, your pensions, your property and everything. And then finally, they help you build an asset income model, which is for you. It's personalized. It's just for you. And you get your own personalized model, your own personalized plan. And I mean, for me, there's so many people and so much feedback that we've had from people. One of the most valuable benefits of joining the mastermind has been the introduction to Calio Partners. Through the Enneagram journey, I gained a deep understanding of not just my personality type, but also my unique investor profile. Working with Anthony, I was able to map out and document my current investment portfolio, identify key gaps, and explore my asset liability model. Seeing various ALM scenarios projected all the way to 99 was truly eye-opening. It gave me a clear roadmap for when I begin prioritizing financial freedom while still securing the retirement lifestyle I envision and building a lasting financial legacy for the next generation. Meeting with Garth introduced me to the critical role of the family office. His guidance has been instrumental as I navigate the complexities of managing generational wealth and succession planning with our family portfolio. So it's all about the personalization. And then finally, number 8 is impact investing. Now, in 2009, the impact investing market was 50 billion. 2014, 500 billion, 2020, 1 trillion, and in 2025, 2.5 trillion. And this is all about people wanting to invest and have a positive impact on the planet, which is why the wealth movement is so important to me, because it's about creating, it's literally its tagline, is creating a better and more sustainable planet for all. Now, a good example of this, I've been saying for a long time, imagine if you could have a solution where you could do rent to invest. So affordability is a massive problem around the world in all major cities, affordability. So imagine if people were renting, and in the process of renting, they could start to buy a piece of the building, okay? And so they now have a mindset of being a landowner. They don't want to necessarily buy the whole apartment. They don't want to manage it and deal with all the shit, but they want to start building a balance sheet and building wealth. So imagine if they were spending $1,000 a month in rent, $900 was going towards rent, but $100 was going towards buying a piece of the building. And by the way, this is what I'm trying to do with Gary Sachs in London at that tallest residential tower in London. Or this one here, investors wanting to have a purposeful impact. So particularly women are really driving this. And funny enough, Marina, you were talking about this just today. We've got this massive transfer of wealth in this next decade where more women are going to control more wealth in the next decade than men. And one of the things that's really important for them is values investing, impact investing, etc. And then finally, this whole digitization of real estate and the impact it has. A couple more trends just to add. Number 9 is speed. You need to be able to move fast. Number 10 is the Entrepreneur 5.0 model, which is about being fully digital, data-driven, high-tech, and high-touch. Number 11 is they've each pivoted rapidly. So you'll notice with Wealth Migrate, Wealth University, you'll notice we pivot if stuff works. And when it doesn't work, we pivot as well. Cutting what was not working, like the payday accelerator didn't work for us. It was cheap. It was bringing in the wrong type of people. And we just scrapped it. And doubling down on what does. The mastermind, as an example, has worked for us. We're doubling down on that. Wealth Accelerator has worked for us. We're doubling down on that. They have high trust with their investors, team, and customers. Their trust account helped them fill their bank account, which gave them the fuel to accelerate. So again, this is where you got community, you're building together. This is about people becoming shareholders, investing, because you built a trust environment. And finally, they're resourceful. So another article that I wrote, I don't even remember when, but I think it was about 8 to 10 years ago. It all talks about this technology disruption and this cultural disruption. So remember, I've spoken about the 8 technology trends and the 8 societal trends, and how the $13 trillion real estate market is literally going to get disrupted by them all intersecting. So again, I've already shared it with you in this presentation, but I can share the article if you want to go and read all about it. And then something which is new, so this is not 10 years old, because I learned this from Garth Wellman, is the 6 mega investment trends. So the first one is anxious societies. The second one is infrastructure. The third one is technology. The fourth one is the silver economy. The fifth one is millennial values. And the sixth one is climate change. So now let's look at those in a little bit more detail. Anxious societies. This is affordability. So I just spoke about affordability, people not being able to get on the housing ladder. Do you know that in England, the average person in England is now 44 when they can first buy their first house? Like I bought when I was 22, just to put in perspective. In the US, you can't buy until they're 45. They're worried about their employment and stable employment, and because jobs changing all the time, and then personal security. So this is all part of the anxious societies. Now, this is very much the millennials, and it's like, how do you solve this? How do you give them peace of mind? How do you give them access to be able to invest? How do you give them passive income? So that they're not reliant just on their job, et cetera, et cetera. The next one is infrastructure. So, you've got smart cities, you've got telecoms, you've got data centers. Hopefully this one I don't need to talk about, because if you've been part of this community, I've been explaining to you why that is the future. I honestly believe data centers is the single best infrastructure we can invest in based on where the world's going. Technology, I've been through all the trends in technology already, the 8 major trends. So I'm not going to discuss them all again. Number 4 is the silver economy. So this is the people one above me. So I'm a Gen, what am I? I've forgotten what the hell I am. I'm not a millennial, I'm the one after that. But anyway, Gen X. This is the baby boomers. So if you look here, there's some fascinating stats. So they're into, they're the wealthiest generation ever, and they're all now in retirement, in terms of the process. So it's about entertainment, it's about golf estates, it's about care facilities. If you just look at some of the stats here, Europe is aging. By 2060, 1 in 3 Europeans will be over 65. Demographics change present great opportunities. By 2025, the silver economy is expected to contribute 5.7 trillion to Europe's economy. Active aging and good health, travel, work more years, learn new things. By the way, our average age in the mastermind for ladies is 58 and for men is 59. So it's really interesting, just the learning new things, people realizing they're going to work for longer, they need the money, they need to make sure their investments can last longer, and ultimately people want to live independently. And then finally, 2 more, millennial values. So this is the millennials, the digital natives that want to travel around the world. They don't want to be stuck in one house, one apartment, lifestyle and health, live in different ways, etc. Purpose and change. So purpose is very important as well, in terms of where the world is going. And then finally, climate change. You've got green energy, you've got nuclear power, you've got smart food, etc., etc., etc. So this was the ecosystem that we set out to build 10 years ago. You had Wealth University, the learning environment. You had Wealth Migrate, which is the international investment and slightly more sophisticated. You had the Wealth Movement, which is the collective of the entire movement. And then with time, we built all the technology, but with time, we want to launch the brand Wealth Create, which is local investing. Now, I want to share with you a little story. And just do me a favor, before I share the story, are you still with me? Why don't we just stand up quickly, do a quick shuffle. I know you've been sitting on your bums for an hour and 40 minutes, but I really kind of want to share with you my own personal story here, which I think will be very valuable for you. And I'm going to be wrapping up fairly soon. But why this and how this all came together. Just do me a favor. I can't see you guys. So are you standing up? Yes, no. Are you ready? Are you ready to get into the story in terms of this process? Yes, no. Am I talking to myself? Okay. It's hard to get jokes to communicate.
Go.
Okay. So the point of the story is that I am very passionate about the space. You can probably pick it up. Like I said, I have an honors degree, a master's degree. I've been to Singularity University. I've done more studying and understanding in the space than most. And so we had IPS, International Property Solutions, and I was actually sitting in Bloemfontein, believe it or not, with a guy called JD Fox. And it was that night that I read the fact that crowdfunding had been legalized in America. So it was basically the Jobs Act had come out. So I'd been working with Roger Hamilton for a while, and Roger Hamilton is a futurist, and he had helped me know these trends, because I literally, I'm just going to stop sharing quickly so you can see me properly. Back in 2002, when I bought my first London house, I was like, I didn't have enough money to buy the house on my own. I was like, well, why can't a bunch of us buy the house? So I went to accountants and I went to MBAs and I went to lawyers and I said, why can't we buy this together? And they're like, it's illegal. I was like, why is it illegal? And they just gave me 50 reasons why I couldn't do it. Anyway, I still bought a house with my mate. So there's always a way. Where there's a will, there's a way. But the point being is that I've always gone like, property is so expensive. Like to buy property in London was so expensive. Like, why couldn't a bunch of us get together and do it? So I didn't know the word crowdfunding. I literally wrote a dissertation on this in 1998, but I didn't have fancy words like crowdfunding. And then Roger Hamilton was the one to actually go like, Scott, this is the trend that's happening. And I realized that I'd been talking about this for 10 years, but actually it now had a name. It had a name called crowdfunding. And I was so excited about this, but we couldn't do anything about it because there was no regulation. And without regulation, you can't do anything. So in 2013, I was in Bloemfontein, and I'm literally there reading it. And Jaco Moritz, who's my business partner and co-founder of Migrate, still talks about it to this day. I stayed up the whole night. I literally read about it. I was like, it's happening. Like the world has finally woken up. And so we got Migrate going in 2013. We launched in October 2013. And I, because I had my own company, I funded the whole start of it. So I paid for the company, I paid for the tech developers, I paid for everything in terms of that process. But if you've ever built a tech company, it's expensive, okay? Because it takes quite a long time for your revenue to make, but your costs are already here. So there's like, you kind of got this gap. And so I had a problem. And a number of people were coming to me and they were saying, hey, Scott, because we're doing medical buildings and whatever in America. And they were like, hey, we love the ability to invest in the medical buildings, but how do we invest in the company? How do we invest in the platform? And I was like, no, you can't do that. And then I read this book called Behind the Cloud by Mark Benioff. So if you've heard of a company called Salesforce, Mark Benioff in 1999 basically went to a whole bunch of venture capitalists and he said, hey, I've got this company. I'm helping people take their CRM, which is customer relationship management system, and I'm going to put it in the cloud. And they were like, you're dreaming, dude. Like you're literally dreaming. Like no company is ever going to let their data leave their premises. Like everyone had servers and there's no one, they're not going to allow you to put it in the cloud. So then he went to his customers and he said to his customers, well, you clearly believe in what we're doing. You trust what we're doing. Why don't you invest in the company, become a shareholder alongside us, and then you'll benefit from the growth. And that's what they did. And when you look at Salesforce today, it's a $50-60 billion company. And you can go read the whole story. And this book, Behind the Cloud, I mean, if you enjoy inspirational stories, it's an incredible, incredible book. And when I read that book, I was like, well, hang on. So we've got a community. They're keen to participate. We need funding to be able to allow this growth. It really is a win-win-win solution. And so in 2014 was when we launched our concept of what we call a wealth partner. And that was where we call them a wealth movement partner, and ultimately where people could participate and where not only could they benefit in using the ecosystem, but also participating in the ecosystem, but also being an investor in the ecosystem. So I always say to people, there's two reasons that someone becomes a wealth partner. One is they want to make a profit. You know, trust me, I'm not Mother Teresa. I have not dedicated the last, more than decade of my life to build a philanthropy. I've got no interest in that. But I do very much believe in profit, but I also believe in purpose. And I fundamentally believe that if you want to build $1 billion company, the easiest way to do that is to empower 1 billion people. So it's all about profit and purpose, and both are important. And if someone came to me and said, listen, Scott, I'm only interested in profit, then don't become a partner with me because we're not aligned. And if you came to me and said, I'm only interested in purpose, then we'd also have a problem because I'm not running a charity. So it's both. It's profit and purpose that go together. And I created this back in 2015, which again, if you go to that book, where did I put it now? Exponential Organizations, from this book here, the strongest and most resilient structure in nature is the honeycomb. And so I built the Wealth Collaborative Honeycomb. And if you look here, you've got in the center, which is who our wealth partners are, you've got empowered people co-creating a better world for all. And there's 6 parts to this. So you've got the real estate partners, like the partners. You got the technology. You got the investors, both online and offline. You got the vision and mission. You've got exponential, which I've tried to explain today, ideas and scale. Then you've got typical business, legal, finance, HR, etc. Now, I could, again, talk to you for an hour about this. But this is our ecosystem. This is what we set out 10 years ago to build, and this is what we've built. Okay. And so the question I have for people is, do you want to be part of this generational opportunity? Because the reason I've invested the last decade of my life is I can see the technology trends and I can see the societal trends, and they're all intersecting. And like I told people back in 2015, it was going to happen in this decade. It was going to happen between 2020 and 2030. And right in the middle, in 2025, 2026, is where the opportunity lies. And so I wanted to share with you just some slides to give you a better opportunity. So our holding company that we call ourselves is the Global Wealth Group. And our purpose, our vision is to help everybody invest like the top 1%. So it's very important. You've heard me say this 1,000 times. If you've ever heard me present, it's to help everybody invest like the top 1% in terms of that process. Our mission is to make quality alternative assets accessible to anyone, anywhere, from any amount. When you look at the traditional current industry, so you and I go along, we meet a financial advisor, it goes through an institution, through a REIT, and we finally invest. Each layer is full of fees. You're not tied to the actual asset. The secondary market is completely tied to the stock market, you know, et cetera, et cetera. By the way, there's a higher than 70% correlation with the stock market, even though you think you're investing in property. Or you go and invest in a direct property, and anyone who's ever done this, I mean, I know Alan and I have been bitching about our London experience. There's 16 different middlemen between you and your investment. I don't care what they say to you on the cookie jar. It is difficult. It's expensive. It doesn't get you great returns. I know. I've helped 2,500 people buy houses or apartments, and I own 16 myself. There's high minimums. It's inaccessible. You can't diversify. The banking, tax, and compliance is a nightmare. The management is a nightmare. You've got long-term cycles, and there's just lots of hassles involved. So, you know, when you look at those, you've got the primary market and the secondary market. And the challenge is that literally fewer than 13% of people on this planet have access to real estate. And of that 13%, less than 1% have access to commercial real estate. And so we decided, you know, when you look at it, that's ridiculous, because if you take the stock market, it's got an average return of 8%. By the way, I listened to something from Tony Robbins 2 days ago. And the stock market, the S&P 500 for 37 years has done 9%. Private equity has done 15.6%. And then the question is, why are people not getting access to private equity? It's got higher returns with lower risk. And by the way, if you don't agree with me, go listen to Tony Robbins. I'll literally, if you just type in there Tony Robbins, I will send you the podcast with Tony Robbins and Alex Hormozi, where he literally is talking about this. And what I get so excited about, I mean, Marina just put in there private equity is where it's at. We literally decided a decade ago to take you and me and help us invest through a platform directly in. Now, I've got a picture of a property, offshore investment, private equity in a deal. It's the same thing. It's alternative assets. Okay, why? Accessible. Well, you can get access from $10. No unnecessary intermediaries. You're investing directly. You got full transparency. It's simple, quick, and easy, you know, through the platform. I'm sure I don't need to show you. If you want me to do it right at the end, I'll show you how to invest. In fact, I'm going to show you because I'm so flipping proud of this. If you go back to the platform and I go to Wealth Migrate and I decide I want to, let's just go and pick any deal, and I go to Bramhoff. Oh, by the way, we've got this new deal. Hey, how cool is this? Let's see if it's live. So this is the industrial deal. You guys are literally the first people. I might be the very first person to invest in this. I want to invest from $10. I literally go continue. I digitally sign the agreement. I can download the docs and I go agree and I go make investment. By the way, for the mastermind members, you've just seen that the deal's live. I actually got a WhatsApp just before we went live. If you go to my portfolio, you can see that I've just invested in that industrial deal there. I can manage everything all in one place. I can manage my wallets. But again, you're all hopefully investors on the platform. You know how easy it is. Why do I get so excited? I used to help people buy houses. It took months. Then you had to set up companies and structures and bank accounts and all that shit. You just literally watch me invest in an industrial building with a company that has a track record of, I think it was 18% a year. They're managing, I think it was 400, I can't remember exactly, but $460 million. And you just would notice me invest alongside them with $10. I think it's truly incredible. So We've got people in 178 countries now. We've done 1.3 billion. We paid $31 million. I need to update this actually in terms of distributions and exits. We've got 50% repeat investors, 7,000 transactions. Now, I'm not going to go into all this detail, but this is important in terms of who our total members are. So we've got about 30,000 members. We've actually got now 1,600 active investors. The IRR that we've got for the last 10 years on average is about 14%, and we've got 178 countries recommended. In terms of unit economics, if people, but this is where you've got a customer acquisition cost, so it's what you pay for a customer. But what's so important here is that we've got a long lifetime value. So when someone comes on and they start using the platform, they use it for, so the average bank, when you join a bank, the average person stays at a bank for 15 years. So we're not selling an umbrella. So like Amazon can't spend too much money getting you because they don't make much money out of an umbrella. In our case, every time people invest, they reinvest, etc. So the unit economics when it comes to customer lifetime value is very, very in favor basically of where things are going. We've also got a B2C, so business to consumer face, which is Wealth Migrate. And then we've got a business to business, which is where we can help the likes of Farmers in Wealth, Women in Wealth, etc. And even with time, we can even help other companies in terms of it. So how does that all work? You've got the technology platform, the compliance, the wallets, and everything sitting here. You've got access to global alternative assets. And then we've got our own distribution through Wealth Migrate, which is our own customer-facing brand. And then we've got our partner distribution, which is where we can white label. And there's a whole bunch of white labels that are already done and out there in terms of where we're at. In terms of the competitive landscape, this is something really important to me. So on the bottom here, you've got technology and digital wallets. And so that's going from bottom to top. And then over here, you've got global focus and compliance. So it's quite a crowded market. There are a lot of platforms that are in England helping an English person buy English property. There are a lot of platforms in Australia, in Europe, in America that help Americans invest in American property. But there's no platform that does what we do, that has global compliance, global wallets, and the ability to invest across different countries, currencies, assets, partners, and time. And so there's a significantly big moat, okay? And it's important to understand because you want to look at defensibility. And so why that means, what defensibility means is could just other companies come straight in? And it's not that easy. It took us 18 months to integrate with Lemonway. They're the biggest digital wallet provider in Europe, but we're the only one that does global. They only help people in Europe invest in Europe, whereas we do international. We've got collaborative smart investing. We've got our authorized licenses. And by the way, by the end of this year, we'll have our European license and we're aiming to have our British license. We're a juristic rep in England already, but we want to have our own licenses. We got this is one of the most important things, I think. Anyone can build technology, but with my experience and our partners, and particularly with Calio as well, we've got more than 20 years experience of doing international business across 5 different continents. You can't buy that. Like what I've forgotten about making mistakes with partners, most people don't know, and it would take them 20 years to catch up. Focus on community. Well, we've built the entire company on community since we started in 2004. And it's a very sticky product. Like I said to you, when people invest in their wallet and they reinvest, like it's going to take a lot to move to another company or another platform. So it makes it very defensible. And then finally, in terms of the market size, this is, these numbers can kind of get ridiculous, but there's 1.1 trillion going into global alternative assets. If you took just 25% of that, and then you looked at even just a fraction of that again, the total addressable market, which is what they call the TAM, is $1.65 billion. And that's if we just had a tiny slither of the alternative asset market. And if we had a 3% transaction fee, that would make this company $1 billion company. Now, I'm not saying we will be $1 billion company. I have every intention of trying to make us one, but I'll just show you that the ocean is massive. There's no problem with size. Who's the target customers? Again, I think this is something that differentiates us. We come from the emerging world. We know how Africa works. We know how China works. We know how India works, because the emerging world is chaos and we're good at chaos management. So I've already explained to you why we want to go after these markets. And I think it differentiates us from the first world markets that are quite overcrowded. We've got a team. It's a small, nimble team, but highly specific in all the different areas. So whether it's tech, finance, compliance, everything that we require. So In conclusion, why did I sit down with Garth originally about a year ago, actually, and say, listen, like I really want to now grow the company? There were three reasons. One is we need to grow distribution. So we need to grow new areas of distribution. Two is we want to increase profitability. So that means that for the current members, you want to be converting members into investors. You want to be increasing the number of investments they make, and you want to reduce the cost per investment per transaction. And then finally, on the technology side, you want to continually be upgrading the technology. As an example, we this year want to launch our app. So have a fully functioning app so you can do everything on your smartphone. We got to get the European compliance in place, and we've got to automate the KYC process. So make it really easy to onboard in terms of that whole process. So we took that, and we took the amount that we would need. There was 21% needed for profitability. There was 29% needed for technology, and there was 50% needed for distribution and compliance. And what we agreed with Garth and the team was that we needed to raise $250,000 to be able to achieve that. Ideally, I mean, Wealth Migrate is already profitable and growing through revenue. So this was purely Wealth Migrate that needed it in terms of the tech, the compliance, and the distribution. And where the opportunity lies for people, and I think this answers your question, Sonia, earlier, is that the price that people are participating at. So by the way, I invested here over $1 million at 35 cents. And the target return is 5 to 7 times. I'll explain that now. And the time frame is 5 to 7. So remember, this is private equity. It's not guaranteed. But that's the time frame that we're looking at. I'm looking in terms of dividends and distributions. I don't believe that, and again, my own expectation, that we'll be getting it for the next 3 years or so, because we really want to grow the company. But within that 3 to 5 year period is, what's interesting is whether we raise $500,000 for a deal, or if we raise $5 million, the costs don't change at all. All that happens is that the revenue goes up and the profitability goes up. So the moment we get through break even, then everything else is upside in terms of the process. And the intention this year is to break through the break even point. Now, is there risk? Of course, there's risk. It's a private equity investment. It's a technology company. Obviously, we've got big aspirational dreams, but please don't underestimate. This is not investing in a property. If you invest in a property and something goes wrong, the property's still there. This is a company, and there is risk in investing in private equity in a company, which was why you've got to come down to who's the company, who the founders, who's driving it, who's the jockey making it happen, and like, do they have a track record, et cetera, et cetera. Like, that's the due diligence part that becomes important. Let's sense check that number. So when I say 5 to 7 times, if you take a 5 times return at 35 cents, that would be $1.75. So within 5 years, $1.75. That means the valuation of the company would be 35 million at the time, which means the revenue would be about 3.5 million. Now, currently the revenue is sitting at about 500,000 in terms of that process. So it's over the next 5 years, like, we're growing. Our revenue has doubled year on year for the last 2 years. And so, like, I see no reason why we won't actually achieve that within 3 years. But I want to be conservative. So that's why I'm saying 5 to 7 years. But it's not massive, ridiculous numbers. It's very achievable numbers to achieve the returns in terms of that process. And yeah, in conclusion, if you're interested, then just reach out to me and let me know. And or Alex, where's that slide gone? I do remind you that the best opportunity within private equity is in this growth phase. And I want to explain that too. So if you look here on the left, you've got company value, and at the bottom here, you've got time. So they call this the S-curve. Okay, and this is typical funding and how businesses work. So in the startup phase, this is where kind of friends, fools, and families invest. Like back in 2013, 2014, it's an idea. Like, nothing's guaranteed. Then you go to the scaling phase. So this is that growth and scaling phase. And then you go to mature and finally listed. So if you take down the bottom here, you got founders funding. Like, I founded it personally. I put my own money in. And you've got some kind of seed investors, or even kind of angel investors, would watch what we had in the beginning. Then you kind of got venture investors, and this is where people that want to go through the scaling phase. Then finally here, you got large funds, and then you got corporate money. This is typically post-revenue. So this is exactly Wealth Migrate. It's post-revenue, it's making money, but it's pre-profit. So it's funding the growth. Okay. Here, you're typically profitable, predictable, it's got lower growth, and it's got dividends. So that's the kind of the curve. Where we currently sit is we're sitting right there. So everything's built, and now it's about growing it. It's about getting the European compliance, building the tech and the distribution I mentioned, and that's how we grow to this point here, which is where we're going. What do we need to do that? We need to capitalize for the finance and the deals. So we need to, the finance team, because the one thing that is not tech, it's very hard to tech this, is bringing on new deals, doing distributions, etc. That's quite manual. So we need to keep growing the finance team. European compliance, the mobile app that I mentioned, and investor activism. So this is all about growing, always growing the community. And that's where we sit, and that's the opportunity. So the final thing I wanted to say, if you take the 6 mega trends, my opinion, I'm not necessarily guaranteeing it, but this is my opinion, is if you take anxious societies, we deal with that. If you take infrastructure, we deal with that. If you take technology, we deal with that. If you take the silver economy, we deal with that. If you take our mastermind, it's pretty much everyone in the silver economy. If you take millennial values, we deal with that. The only one that I think we probably don't deal with is climate change. And I know Cynthia would argue with me that my data centers are probably impacting that. So don't worry, Cynthia, I won't give myself a tick. So I'll ask you one last question then, and then I want to show you some more stuff. So let me just go to polls and quizzes. I will end that poll, and then I want to just launch another poll for you. So yeah, I've really shared with you these trends, and I'd love to know if you would like to join us as a wealth partner. If you would, do me a favor and just put it in the poll and let me know. It is by invite only. So a long time ago, my mentor of mine said, Scott, be very careful of who you get involved. It's a bit like what we've done with the mastermind. It only takes one idiot to mess up a golf club. And so Alex and I are very kind of purposeful. Again, if you're part of the mastermind or whatever, you've already kind of passed those tests. But yeah, hopefully I've put that poll up. I wanted to share with you a little video here. And this is a cool video we made a little while ago, a couple of years ago. And we basically said to all of our partners, we said, what is it like being a partner? And I want to just share a video because my wish and dream for you is that your face and name is here, in the near future, and that you come on this journey with us to truly not only be profitable, but also be purposeful. This was their experience, and my wish for you is this will be your experience.
Inspired.
Freedom.
Abundance.
Credibility.
Enlightened.
Impactful.
Powerfully enabling.
Unimaginable.
Peace of mind.
Phenomenal.
Total honesty.
Reliable.
Genius.
Engaged.
Excited.
Hopeful.
Exponential.
Empowered.
Connected. Dream. Innovative.
Global diversity.
Opportunity.
Freedom. Change.
Excited.
Blessed. Empowered.
Incredible. Privileged.
Revolutionary. Super. Disruptive.
Support.
Change.
Empowering.
Excited. Interesting.
Evolving.
Opportunity.
Buzzing.
Powerful. Fortunate.
It's possible.
Work. Community. Inkululeko. Proud.
Transformative.
Fiddle.
Inclusive.
Satisfaction.
Trust.
Disha.
Discipline.
Secure.
Proud.
Fortunate.
Excited.
Driven.
Privileged. Community.
Spearheading.
Unlimited. Excited.
I feel inspired.
Partnership.
Future.
Inspired.
Peace of mind.
Excited.
Metamorphosis.
Inspirational.
Freedom.
Abundance.
Pathfinders.
Empowered.
Inspired.
Purposeful.
Opportunity.
Engaged.
Passive income.
Transformation.
Generous.
Grateful. Rewarding.
Legendary.
Cash flow.
Diversified.
Interesting.
Exciting.
Freedom.
Gives me options.
Empowerment.
Highly innovative.
Exponential.
Bold.
Opportunities.
Grateful.
Freedom.
Absolutely inspirational.
Leading edge.
Empowering. Adventure.
Game changer.
Groundbreaking.
International.
Liberating.
A
HOPE. Phenomenal. Professional.
Life-changing.
Inspired.
Opportunity.
Freedom.
Independence.
Diversified.
Peace of mind.
Prosperity.
The future.
Being a wealth partner is empowering.
I love that video. And just, Marina, I'll answer your two questions here because I think they're relevant. One was, how will you be using AI to accelerate growth? So that's exactly what I want to do with Yakko this year. I think with the mastermind I shared with you guys in December, the whole wealth clone. I'm actually going down to try to see Garth next Wednesday. I've already told him and his partner Nicholas and Anthony all about it. So it's all about empowering people with AI to make smart investment decisions and actually taking a lot of what's in the mastermind, which is where people are getting it one-to-one with human contact, and taking the science and the technology and things like the wealth EQ and putting it all into AI, helping people build their own clones to help them invest, to accelerate their growth and their investing. So it's my single biggest passion in 2026 is going to be accelerating this AI space and using everything I've done in my own clone space, but building it now in the wealth space for everyone. You also asked what's the exit plan. So for me, there's 3 exit plans. The first, which was the one I originally thought, was that we want to have an IPO and go and be on the New York Stock Exchange and blah, blah, blah. To be honest, I watched Roger Hamilton go through that. It was an absolute and utter shit show, and I've got no desire to do that. So just to be clear, like that's not on the radar. The second for me is actually you build, so that ecosystem we're building, and if you take what I like with the Virgin model, is that Virgin had multiple companies and they sold off Virgin Music, but they still got Virgin Atlantic and whatever. So for me, like you can build different ecosystems, and let's just hypothetically say you build Women in Wealth, and it really takes off, and there's 1 million women in it, and suddenly some big bank comes along. I'm not saying this should happen. I'm just picking on any one of the sectors, and goes, we want to be able to deal with 1 million women, and you can actually sell parts of the business which can provide people with really good dividends. And the third one for me is just pure secondary market, because I mean that's what our technology is, and people can buy and sell their shares, but ultimately you want to just keep growing the revenue, and the revenue will, as I said to you, because the costs pretty much stay the same, but the revenue dramatically increases. And just to put in perspective, our platform right now can do 15,000 transactions a second. That's what it's been built for. 15,000 transactions. Our head of tech was the guy that built the platform for a big mutual fund in New York that does $13 trillion a year. So not only do we have scalability, but we've also got a lot of security. So we can do 15,000 transactions a second. We've only done 8,000 transactions in our whole history. So the scale is tremendous. And with that scale, you get profitability. With profitability, you get dividends. So I would see us working on a factor. It's called like with dividends, where we take sort of 50% of the profit and we pay dividends, and we put 50% and we reinvest into the business to keep growing it. So you've got a combination of income and growth. So hopefully that helps, Marina, in terms of your question. How many shares are in issue? Time until close. So Richard, we're closing. So we were actually looking to close at the end of last year, but from a compliance perspective, we actually Paulo's been trying to finalize the structure with Lemonway. It's due to close the middle to end of February. So pretty much the gap now is the next kind of 2 to 4 weeks if people want to participate. And don't get me wrong, the best part about participating now is you're in the same tranche with Calio, the exact same conditions, etc. So once it closes, it closes. I'm not in the game of rushing people. I'm just letting you know what where we're at. By the way, I didn't plan on doing this presentation. There were just a bunch of mastermind members that said they'd like to know more, and my logic is rather to do the presentation for everyone, and then I can give the information if people want to talk to me one-to-one, I can, but at least I don't have to repeat the same thing over and over again. What's the minimum? So because this is off platform, and it's you're dealing with a shareholder, you're signing a shareholders agreement investment. We've tended to stick to the minimum of 25,000 US, which is kind of what we've done. Once or twice, we've made what's the word called? I've managed to get shareholder approval, or not shareholder, but board approval, to do something slightly different. But generally, it's 20. People do it in tranches of 25, 50, and there are benefits. If you invest at 25 or 50, and you want to talk to me about it, there are benefits, 100, there's benefits, as an example, joining different levels of the mastermind and everything else. So we've tried to make it a win-win situation for everyone in terms of the process. Yes, I'll share a copy of the presentation. Kerry, where can I find out more about the white label? I can chat to you about that. The minimum is pretty high. Yes, Sonia, it is. So this is not like a crowdfunding thing. You're dealing with kind of with people at a one-to-one level. It's not, we can't do it on our own platform because of compliance. And so we just make sure that it's pretty simple. I'll share the recording, no problem, Kerry. And I'll also share the PowerPoint. I just want to finish off. I know everyone's getting tired. I just want to finish off with some slides here. And if there's any more questions, just let me know. But I just want to show you some stuff that I found really interesting. So this is a paper that I found a while ago, and it comes from PwC, and it talks about what was going to happen by 2025. So there's 145 trillion that's coming into the management space, which is doubling from 84 trillion. 60% of global assets under management are seeking a growth. 21 trillion is going into real estate, private equity, debt. It's doubling in size, okay? And by 25% of global assets under management see passive management reaching 36 trillion. What does that all mean? Well, in 2016, it was 84.9 trillion. It went to 111 trillion and then to 145 trillion. There'll be fewer firms managing more assets significantly more cheaply. Faster growth in Latin America and Asia Pacific. Alternative assets, real estate, private equity, and private debt will more than double, reaching 21.1 trillion. This is a massive trend. Like, hopefully you can see it's happening. Like, most people don't even know what private equity is. They don't even have access to alternative assets. Most people don't have access to commercial property because the financial advisors have never made it available. Whereas now it's becoming available. Active investments will continue to lose market share to passives, passive income, passive investment, alternatives, but AUM will increase. You can see the CAGR, which is the growth, 6.7%, like what it's doing here. You can see this. So there's massive growth in private equity, private debt, real estate, and infrastructure. So this is and then finally, the different parts of the world in terms of where it's growing. And primarily, it's the emerging markets where the biggest opportunity lies. If you took 1% of alternatives, it would be 211 billion. If you took just 10% of that, it would be 21 billion. And if you took 1% in fees, that would be 200 million in revenue, which, by the way, would value the company at $2 billion. Okay, I'm not saying we'll be 2 billion, but I mean the scope is massive in terms of the opportunity. And then finally, primary markets versus secondary markets. So secondary markets, reminding you, are the stock market. Robinhood raised 2.4 billion as investors bet with online brokerage. Robinhood rivals public.com soars to 1.2 billion. So about 10 years ago, or even 20 years ago, they democratized access to the stock market. Okay, now what's happening, and it's exactly what Tesla did. So when Tesla started off, they started off with building the sports car for wealthy people. So if you look at his system here, he says, so in short, the master plan is build a sports car, use that money to build an affordable car, use that money to build an even more affordable car, while doing the above also provide zero-emission electric power generation. Don't tell anyone. So that was Elon Musk's idea. What we did was exactly the same. So when we started in 2013, 2014, our minimum investment was $100,000. Then we got it to $10,000, and we're now sitting at $10. Okay, so we've done exactly that. We've gone from the sports car to democratization. Again, a slide that I built in 2014 for the investors back then. Digital wallets. Kathy Wood is one of the best venture capitalists in the world. She says that you should pay somewhere in the region of, you would value a company somewhere in the region of 250 to 1,900 per user in terms of like the opportunity. So this, like when you build infrastructure with wallets and everything else, we've got 1,600 investors, which would mean we'd value ourselves at 32 million. Now, we are not valued at 32 million. We're valued at, 15% of that. But it just shows you another valuation methodology. In terms of focus, there's plenty of different platforms around the world. We're the only one that's in multiple countries, currencies, and everything in between. And then the sustainable development goals, like I said to you, we're actually approaching, and helping with 5 or 6 of them. This is the final video that I wanted to share with you. This is Roger Hamilton. So he's the futurist that I worked with since 2011. And it's interesting because this is what he had to say about the future of people investing in things like property, private equity.
But you have to do that because the democratization of real estate is going to be the biggest change that happens in fintech beyond anything else, in terms of it's going to disrupt more than the banking system. It's going to disrupt more than what's happening in stocks and shares. It's going to disrupt because basically property is the one last non-distributed asset. I mean, that's just the basics. It's like the process to buy a property is the most ridiculous thing ever if you actually think about it. And it could be as easy as basically buying a stock or a share, right? And that's what is going to happen for sure.
He's drawing on my
But
screen.
you have to do.
Tilly, why are you drawing on my screen? Right, I'm just going to remove Tilly's thing. Okay, then let's just go back to, how do I switch that off? Annotate off. Okay, so hopefully you now understand Wealth 5.0, impact, creativity, high touch, high tech, digital wealth, and that's literally what we've built for. For me, it's all about bringing and putting smart investing. So our dream, smart investing, is to put smart investing in every single person's pocket. And to finish off, what I believe is that what I've shared with you is just the tip of the iceberg. But with you, plus our technology, ultimately we can put smart investing in every single person's pocket. And I finish with a poem that we wrote in 2015, which is all around the wealth movement. So this is about creating a better and sustainable planet for all. Imagine a world where most people or all people are literate, a world where education is par for the course, a world where women are treated as equals, a world where all people have access to investment opportunities. In this world, children grow up in a family raised in a home their parents own. Because of this, they are healthier and have access to healthcare facilities and caregivers. They live in less stressful environments with less conflict in the home. Imagine a world where 6 billion people on the planet that currently live in poverty can live a better life. Even if we help just 1 billion people in the next 5 years, imagine that world. The wealth movement wants to create that world. And so my invitation is that, become part of the wealth movement. Put the power in your hands. Come along on our journey, both to profitability and to purpose. And as Nelson Mandela said, money won't create success. The freedom to make it will.
I have walked a long walk to freedom. It has been a lonely road, and it is not over yet.
So I always like to watch that because this has been an extremely lonely road. Jeff Bezos says you need to be misunderstood for a very long time. And what I'm really enjoying now is a lot of the trends that I spoke about in 2015 are now in reality. Just use AI as a great example. For those of you that become a partner on this journey, not only, this is not a one-year journey. This is something that we're looking to change an entire industry. We're looking to change an entire ecosystem. And for those of you who remember what I read you in terms of my identity declaration, like I see myself as a wealth architect. Like we're building an entire ecosystem here. We're not just building one company. We're building an ecosystem to solve the greatest challenge on the planet. And so if you want to join Calio, come along. You've all got access to Alex and myself. I want to finish with one final video, which is a video we made a couple of years ago. And it sums up why we do what we do. Because in anything in life, and Jeff Bezos from Amazon said, mercenaries are people that try and put, if you put money with them, all they're interested in is making a profit, and they'll probably screw you in the process. What you need to do is invest with missionaries. And missionaries are people that it's a big picture purpose. They got a very strong why. And by the way, they create more profit than any other company. You can go Google this. So he always invests in missionaries. And hopefully you can understand that for myself, for Alex, for the rest of the team members, this is a mission. I mean, Alex has been part of this team for 8 years already. Him and I and others have invested the best years of our life to do it. And this is why we do it. So watch this video because it sums up why. And then I'll finish off and I'll answer any questions anyone has. So that's it. I hope you enjoyed it. Like I said to you, it's my favorite presentation. I will share this presentation with you. Again, reminding you it's not financial advice, but all the links are also here. So if you want to go and look at all my sources and links and everything in between, it's all there. I'm deeply grateful for you being here. I love sharing this. This is me really in my happy space. And now you can sort of see with that identity, with the ecosystem and everything, what we've been trying to do. So even if you don't want to become a shareholder, now you maybe understand how it all comes together. If there are any questions, let me look. If you want to fill in the survey, please let me know. Otherwise, reach out to me one-to-one if you've got any questions. I'm happy to help. By the way, when it comes to the funding side, although Alex helps me, I tend to take care of that myself. I mean, obviously he can help, but we try and just kind of keep single-minded focus. So if you want to reach out, probably reach out to me. Will we be sent an investor pack? Sorry, Kerry, good call. I didn't actually say that. There is actually a document. So people like to kind of, go and read a document. So we've actually got a, where's it gone now? That's bizarre. I thought I had it. Okay. I've got the Word doc here. Let me just open up the Word doc. Where did it go now? There we are. Sorry, I don't know why. I don't know. I had the PDF open, but anyway, let me just use the Word doc. So this is just a full investor update. So so this is what Kerry's kind of talking about, where you can understand the problem, the purpose, the business, the market opportunity, the metrics, the customer base, the team, the competitive advantage, the key achievements, the future growth plans, the investment summary. So it's the use of funds, everything's there. So that's kind of a high level overview for people to read through in terms of where we're at. So hopefully that helps. But yeah, if anyone's interested, just let me know. Yeah, so that's about right. As I said to you, about 15, a little bit more than that. So I think it's closer to 7. So yeah, I was just trying to do some mental maths. Yes, thanks for the kind words. Where can we access this? Yes, I would like a copy. So that's fine, Marina. I'll send you. So anyone who's interested, I can send you a copy of the recording. I can send you a copy of the PowerPoint, and I can also send you that kind of investment document. Because the investment document's obviously been created simple. It's 3 or 4 pages to be able to understand. It's everything I tried to share tonight in 2.5 hours, but it's in one document. There's another document if you're interested. So I could share a 4th one, which is a summary that I've done of this presentation with the 8 trends, technology, the 8 trends, society, and the 6 mega trends. And it's just a simple thing if you want it all in one place. Please send it all. Okay, cool. Any other questions? So I will do, if you're interested, just type in there, please send, and then I'll take a screenshot of it and I'll know who to send to. Is there anything that I haven't answered? I'm just checking if anyone. Larada said, what is the IRR of this investment if we decide to go ahead after 5 years? So it's an interesting one, Larada, because you're basically looking to, so it's called a 5 times multiple. So that means if you put in $25,000, just hypothetically, you're looking in 5 years for it to be worth $125,000. So that's the way it works. So in terms of IRR, it'll be a very high IRR. Obviously, it carries more risk, but that's kind of how private equity works. So I think I can go do the maths for you if you really want me to. But I mean, my guesstimation would you'd be sitting in the 30% area, if not higher. Kerry, I'll do a deals update for Brandorf 16,7. It basically just means the total IRR, total return for the industrial deal. So I can send you a link. The lady actually gave a presentation to our mastermind on last Wednesday. It's now live, which is pretty cool. But anyway, the total return per year is expected at 16,7%. Okay, let me just see if there's anything else. I see there's lots of stuff I need to do. So yes, all three, please send all 3. Please send them. Thanks, Scott. Please send all 3. Any chance of a crowdfund approach at a low chance? Yeah, so Sonia, not at the moment. We did do that a while back, and to be honest, it created so much bloody hassle. It wasn't worth it. You have people flipping, complaining and whinging and wanting you to do stuff. And then you're like, how much did you invest? And they're like £10 or $10. It's like, seriously, it's not worth it. So yeah, we I just bought $10. Excellent, Kerry. You figured out how the platform works. Well done. It's brilliant. Any other questions? I know that I've taken up the best part of 2.5 hours of your life. I can't do this presentation any quicker. I know that Shanika and Alex made the meeting like a 1 hour or a 90-minute. I was like, guys, it's never going to happen in that time. And the reason being is I like to tell the stories behind it, because, you know, for me, this is not a PowerPoint. This is a journey. This is a life's mission, actually, which is why I try and share it all. I'm just truly grateful to A, be on this journey, B, have our community, C, that Calio has finally stepped in and joined us in the ecosystem. But D, for me, the thing that I'm probably most grateful for is that 10 years ago, it was a vision and a dream. And now today, everything's built. Now it's about the growth and scaling phase. Like up until now, it's been a shitload more difficult than I expected, just to be very clear. I never thought, you know, I thought the tech would be the hard part, but the compliance and the regulation and the wallets and, you know, that has just been off the charts difficult. But we've done it now. We've figured it all out, and now it's about growth and scaling. Yeah. If someone had told me at 35, Scott, just keep selling houses, it's so much easier. I wouldn't have the purpose and the passion that I have, but I tell you what, it would have been a lot more profitable over the last 10 years. We were making a lot more money helping people buy American houses than this. But I do know in the long term, this will have a much bigger impact in terms of my own personal balance sheet, and also just my own sense of well-being in terms of having a purposeful impact on the planet. Marina, in terms of the white label opportunity, do you see those launching at the same time? Is Alex also focusing on millennials? Yeah, so no is the answer, Marina. I've tried to, okay, there's two ways I'm going to answer that. And I know you know this answer one-to-one because I've told you, but I'm going to say it for everyone. I don't know how to do this. Okay, so myself and Derek and a few others have tried to do it. I'm very good at big picture. What I'm not good at is systems and detail. Okay, whereas my business partner, Jaco Maritz, is world-class at that. Systems, detail, you know, basically you can call it the franchise model, you can call it whatever you like. But when you got one McDonald's, like replicating McDonald's over and over again. So I've been trying to get him in full-time. I managed to get him in part-time from October. He's been helping us systemize and get everything that we need sorted within Wealth University. The next will be Wealth Migrate. And the intention will be to grow that. So when I say Wealth Migrate, like Wealth Migrate already has all its systems, but what we need to do is take those systems so that we can replicate it for women and wealth, for millennials and wealth and whatever. And there's two things that I think we're going to change. We've kind of done it for free so far, like we've just helped people for free. Ultimately, we want to get to a point where someone invests. I'm literally making up, I don't know the number, $15,000, $20,000 minimum, because then you know people are properly committed. The company will have some capital to get going. But yeah, that's the intention this year with Jaco, as you know, Marina. But for others, Derek, I know you and I have chatted about it. I need Jaco to help me do it properly. I can see the vision, but I need him to help me with the execution. My perfect world would be, just so that you know, Marina, would be that every 3 months we have an incubator. 15 to 20 companies or people apply. We only let 4 through. We have 4 come in an incubator. They got to come to somewhere for 3 months, probably online, virtual, but they get trained for 3 months. At the end, they have to qualify, you know, that they know what they're doing and all that sort of stuff. They then pay for their setup fee, and then they would launch their business model within the ecosystem. So it's effectively a business within a business, or a business within an ecosystem. But that would be the sophisticated way of doing it. That's what I would love. I would, because I love helping people build businesses, and by doing that we could build more niche focuses. But I need Jaco to help me with the systems. When is the new deal closing, Jane? It's got nothing to do with exponential technology, but I don't know, Jane. I'll answer deal questions on Friday at the deal event. I don't know the details. So best to wait until he's fully on board. From a woman and wealth perspective, yes. I mean, that's what we were talking about, Marina. So as you know, I'm going to talk to him next week, or I'm going to talk to him hopefully this week, but I'm going to try and see him next week. But yeah, I think that date we were talking about in June makes a lot of sense. Anyway, but I know Jaco, and I know what I'm good at, and I know what he's good at. I'll tell you a funny story. When we did our buyers trip, the very first buyers trip in America, so I'd been doing buyers trips for a long time, but on my own. I'd been going to America to buy property, to help people invest in property, but I do it all with pictures. And then this guy once said to me, well, can I come with you? And I was like, oh, I don't see why not. So give me 1 hour. So I phoned my business partner, I phoned Jaco, and there was a third business partner called Brendan Brown. I said, hey guys, like, what about if we do this buyer's trip? And Jaco was like, what? You can't do that. Like, what are we going to do? How are you going to find a hotel? How are we going to rent a bus? I was like, I don't know. I'll figure it out. So we ended up getting 14 people on our first buyer's trip. And you know, I just rented buses and we had hotels. And it was a bit of a shit show, but it worked. And no, I lie. We had 10 people, and with 10 people, they invested in 14 houses. And we made good money, like 14 houses. And but by buyer's trip number 3 or 4, Jaco had systemized the entire thing. And it was so well run. Like when you arrived, there was Wi-Fi in the bus, there was printed brochures, there was everything. And you compare it to my little shit show when we started. And I always say to people, the beauty of business is you need both energies. If Jaco had his way, he'd still be planning now. To this day, he'd still be planning the buyer's trip. And if I had my way, it would have been a flipping disaster. Like it just because it would have been chaotic. So you need both energies. What is the name of the venue you shared the video of recently? Sorry, Kerry, you're gonna have to help me a bit more. I'm not 100% sure. Oh, was that methodology? Is that what, I don't know which one you're referring to.
How's it, Scott? That's the one with that guy that's super chill, and you said out of all the places you've been to in the world, you've had the most transformation there.
Oh, that was David. Oh, that's Surrender.
Oh, where is that?
In Sedgefield, yeah. So it's 20 km. Yeah.
Oh, nice. Please send me the details on that. Looks very cool.
I know you really well. You should come, Bugger. You'll love that. You really will. Like, no, honestly, it's been one of the best things I've ever done.
Okay, thank you.
But I'll chat to you one-to-one. Okay. Well, it seems now we're just having a general Q&A about everything. Deals, personal development retreats. Yeah, look, if there's anything else I can help with, let me know. No, I said Sonia, I said I bought 16 residential properties. I've subsequently sold all of them, every single one of them. I sold my last one in London last year because it just doesn't make any sense. You're getting a return of anywhere from 2 to 4% gross. You're netting anywhere from 2 to 3% depending on your cost structure. And you know, in commercial property, we're getting 7-8% with an IRR in the double digits. It makes no sense. It literally makes no sense. You've got low returns with high hassle, and you've got high returns with low hassle. Why would you ever want to go for low returns, high hassle, when you can go for high returns, low hassle? And it's my mission on this planet to teach people that. But anyway, it's been harder than I thought. People are so indoctrinated in buying houses. But anyway, that's yeah, it's just a mission. Anyone who's ever owned houses, it's just a mission. Okay, I think I'm going to call it. Thank you, everyone, for your time. It's been wonderful. If you've got any questions, remember I'm live on Friday. I'm always live on Friday. This Friday, I'm going to be dealing with the Brandhof deal. Brandhof, I don't know how to pronounce it, deal. I'll go through it in more detail. And then, you know, obviously, if you've got questions on the funding thing, reach out to me. You've all got me on WhatsApp. I'm happy to help if you've got individual questions. And most importantly, thank you for coming on this thing. You've got to witness me doing what I love most, and that's sharing where the future is going and how we can build solutions for the future. And if you want to join me on the journey, please do. My intention is profit plus purpose. We can have a massive impact on the planet. Have a wonderful evening, everyone. Cheers, cheers.